Okay, so looks like the stream has started. Hello everyone, welcome. Welcome to the Monday stream. Give me just 1 second to set up my end on the charts. So let's go to present, share screen, window, and add to stage. And let's make it a bit wider. Like this. Late by 1 hour. Yeah, so James couldn't make it today, so the stream got pushed back 1 hour. Okay, so sometimes the schedule changes. Let me just show you the schedule. So if you go to the A1 Trading website, you can see, so usually I start the stream, then you have James for 1 hour, and then it's Alan. But today, unfortunately, James couldn't make it, so we're starting the stream 1 hour later. And then after me, it's going to be Alan, then it's going to be Nick, then it's going to be a joint segment, and Tiger will be wrapping up everything. Okay? Let's get started. Let's get started with the markets. I hope you had a good weekend. I was traveling. I was by the seaside, so sunburnt and a headache, but I'm gonna push through it, okay? Just for you guys. First thing we want to do is we want to look at the breaking news. So we want to go to breaking news, and we want to do market moving first. So this is old news. This happened way back, August 19th. Let's see, Wednesday last week. Yeah, so way back. Then I want to look at Forex. So I want to scroll through and I want to see the most important news. So I want to see the news that is actually highlighted in red. Let's take a look. Nothing much so far. As far as currencies go, I think the CAD is pretty weak. I'm not exactly sure why. So maybe we find something here. Senior Trump administration official section tariffs of 50% starts on Saturday. Okay, so it looks like they put the tariffs back on Canada. Now, why is that? I don't know. US Canada is the hot one from the weekend. Okay, yeah, true. So USD CAD gapped up, filled the gap, and then continued up. So that's actually a pretty bullish thing. That's actually a pretty bullish thing to see, because gaps in Forex get filled most of the time, and this one immediately got filled. Well, almost got filled. Let me see. Yeah, actually didn't get filled. Sorry, this gap is still not filled. You can see the gap is from here to here, and it still has not been filled. My mistake. Anyway, Canada, so some pretty bearish news. Looks like the tariffs on Canada are have been put back. I'm not sure why. I haven't really checked Twitter. I haven't been on X. I haven't checked Trump's Truth Social. So yeah, I'm not sure. We should be able to have a deal with Canada, starting on a deal with Mexico. I didn't direct Besant to intervene in the bond market. Foreign ministers discussed the conditions for resuming negotiations that support resumption of navigation. It's pretty much nothing. Also, like last week on Friday, I was offline, so I was traveling. I didn't really catch up on that. Let's see if we go a bit lower. Let's just finish August 21st. Also, let me put the link for the stream. Just 1 second. We're back. Nothing. I don't see much. So it looks like the only news was out of Canada. And that's about it. Yeah. So let's take a look at the Strait. Hormuz's traffic. Nothing. Last update August 16th. Still no transit. Trade volume is 0. Let me just see, has there been a recent spike? No. I don't know why the prior 7-day moving average is still saying 76. Like, that doesn't make sense. It's a 7-day moving average. It shouldn't be so high. What the hell is happening there? And let's take a look at oil. Oil doing nothing, just being elevated here, but not doing anything else. I think we're going to stay in this range. So I think we stay above 80, let's say above 85 and below 110, something like that. So this, I think that happens for at least the end of 2026. I don't think we get a deal between US and Iran. I think the strait remains closed. Is this a massive impact on the markets or on the world economies? Doesn't seem to be at the moment. If you look at the Edge Finder and you go to the CPI data, inflation CPI, it's going down. So 3.4%, the peak was 4.2, then 3.5, 3.4, and inflation seems to be going down while oil still seems elevated, and the strait is of course closed. So all of the analysts, all of the oil experts that were calling for an Armageddon in March and April, looks like they were not correct. Let me just check the price of sugar. Okay. So essentially, if you have been following, that's why I have this note. If you have been following Andrew Campbell on X, he posted that the price of sugar will go up a lot because of the closure of the strait. And initially he was wrong, but then looks like we did have an explosion to the upside in the price of sugar. So it looks like the crops have been hit. Yeah, definitely elevated pricing. That's interesting to see. Gold is still up on the day very much. So gold is doing really well, plus 1.46%, hitting or approaching my first target, which was 4,700. My second target was 4,800. That probably means I missed out on this move. So we never really got a big pullback. We never really got an opportunity to get in. Maybe like on the 18th of August, when we almost hit 4,300. 4,300 was my kind of initial entry level, but we never hit it. So we went close and then we just exploded up. This, I would say, I'm still interested to look for pullbacks. I'm still interested to get in on a potential retest of the 200 SMA like this. But I don't see a lot of upside potential any longer. Maybe if I have a tight stop, I aim for 4,800, 2.38 to 1. That's good. But like the meat of the move that I'm personally forecasting has already happened. So what I think is likely is that we basically hit 4.8 and then kind of do nothing, right? unless you're betting on a debasement trade, unless you're betting on the dollar to lose a bunch of value, and on gold and Bitcoin. So on gold and Bitcoin to just keep going up as a hedge against the debasement trade, as a hedge against the US dollar. But is that going to happen? Is that going to be a sustained move? I don't know. At the moment, it's pretty uncertain. It's pretty uncertain. So Bitcoin up on the day as well, 1%, which is kind of nothing. It did have a massive move up. So plus 25%, absolutely massive. We are now approaching my average entry price, if I'm not mistaken. So I can get out for a break even for my long-term investment that I have from running from 2024. I'm thinking of just closing it for a break even, but I'll think about it. I'll think about it. Ethereum up as well. Let's see. MSTR. MicroStrategy going up, which personally I would like to see this get washed out. I would like to see that maybe bankruptcy for this company, because it's basically a big bet on Bitcoin. It's a leveraged bet on Bitcoin. When you buy MicroStrategy stock, you're essentially buying Bitcoins, but you're getting less Bitcoins for your investment. So it's kind of like a Ponzi scheme. And I think we first need to wash away MicroStrategy and wash away all of the scammers, and then we can go up to all-time highs. So I think the crypto winter is not yet done. Yes, we did have a nice pop to the upside. Yes, it looks extremely bullish. Yes, we're above the 200 SMA, but I would say the crypto winter is not yet over. I think we may need to pull back to 40, maybe even 30K, you know, like this. Like a 70 to 80% correction. Let's do 70. That would be healthy. Let's do to 40K, 68%. I think that would be nice. If you look at all of the previous pullbacks, all of the previous drawdowns, all of the previous corrections on Bitcoin, you would notice that they are like massive. They're huge. 70, 80%, maybe even 90% in some cases. So let's take a look at some more comments. Does gold seem to be reaching real resistance before going back up? I find it hard to believe that gold has no meaningful correction before pumping to new highs. So gold, well, I think we don't go to all-time highs. I don't think it happens this year, or maybe even the next year, because you had a massive run in gold right here. And if you study these moves, if you study these massive moves on gold, you will notice that after such a huge run, after a big correction, usually the rest of the decade even is break even or negative. So I'm not fully convinced that this is the road to all-time highs. I think this is a rally, and then you potentially sell the rally when you hit like maybe 47, 48, 49K or 4,900. Take a look at, if we go to the monthly, look at this. So you had a massive explosion, and then you had 2 decades of nothing. Here again, you had a massive explosion in 2011 and then a decade of nothing. So from 2011 to 2018. And now, well, can we go to the log scale? Log? Yeah, this is good. So this correction was pretty small or pretty short. So from 75 to 76, very short. Then you had this one from 80s to 2000s. Then you had this one from 2011 to 2020. And now you have a start of another bear market, another bear cycle. So the question is, will this bear cycle be like this one, just a small push lower, or will it be like this one, where it took decades for new highs, right? That is the question. Also, let's take a look at, if we exit the log, we go to corn or Bitcoin, we go to log. So the corrections, they do seem to be getting smaller. See, this was 86%. This was 83%. It's always fun to look at the log scale. This was 77%. That's why I'm saying on Bitcoin that this can go to like 70, 80% correction. If you just look at the past few examples. And I don't think that we can set a trend line here. No, we can't. Okay, so no trend line. No trend line there. Let's go back from the log. If you're wondering about my positions, I am in Aussie dollar. Okay, that's the only position I'm running at the moment. Let me see Swiss yen. Swiss yen was a trade that I had running. I closed it for plus 1.64%, so pretty happy with that one. The Aussie dollar is a bet on a weaker dollar overall. I did take 50% off from this position. I put the stop loss to break even, and I'm letting the rest run. Okay, so I'm thinking we're getting the Jackson Hole, we're getting the NFP, we're getting the CPI, we're getting the Fed decision. The market is still, to this day, pricing in hikes for 2026. I'm saying that is highly unlikely. So 45% chance that we get a rate hike this year. I would say that's not going to happen. I would say that's very much unrealistic. The Fed, I think they're just going to keep the rate the same. So repricing is needed here. And the repricing should be bearish for the US dollar because it's going to be a dovish repricing. The market is going to realize, if it happens, again, it's not a guarantee, but if it happens, the market is going to realize there's too many hikes priced in. We need to sell the dollar, and the Aussie dollar should go up. So I took half off. I'm looking to enter with more size if we do pull back. So if we pull back to the 20 MA, I will look to enter again with more size. I think at the moment, with the price being here, it's a bit overextended. So I'm happy to take some profit. I'm happy to take some size off and to put the stop loss to break even. And then I can always add more if we go down. So that's the general game plan for the Aussie dollar. On the watch list for now, I have, again, the trade that I'm running, and I have gold. I would like a pullback. I would like a retest of the 200 SMA of this line. That's what I want to see. Good morning, bosses. Good morning to everyone, and good afternoon to everyone, and good evening to the guys in the Asia session. If it's evening there, let me see. Current time in Tokyo. Yeah, it's evening. Bitcoin only needs a higher high, and then bull market is back, even if we have a pullback. Congrats to the gold bulls. Your view on Euro Swiss, GP Swiss, GP Yen. We can take a look. The decades weren't just because that you can't compare Bitcoin to gold, man. No, I'm not comparing Bitcoin to gold. I'm just saying, if you isolate Bitcoin, if you look at just Bitcoin and you look at the previous pullbacks, the previous corrections were 70 to 80%. Like gold and Bitcoin, there's not a massive correlation there. And there's too little data. But if you look at the bear markets for crypto, the corrections tend to be 70 to 80%. That's what I meant. Just a second. So what but then that voids your point on gold further moving up. Your view, Euro Swiss, GP Swiss, GPN. So for gold, I think a bit more upside is likely. Not all-time highs, but a bit more upside. So like 4,800, I think could be hit. I'm not calling for this to happen. So I'm not calling for this. I am calling for a retest of the 200. Then I potentially get in on a buy position, limited risk, and I aim 4,800. So a quick buy position like this. After that, I think it's pretty likely that we go down and that we continue the bear market. That's how I'm forecasting the situation. Artificially doing yield curve control is actually only a temporary drug because 6 months later it will suck liquidity away from the private sector, even if short term it increases valuations. That could be correct, yes. Does the Edge Finder have a 4-week average on jobless claims, or do they take in data every Thursday? I don't think there's a 4-week average. You can take a look at the 4 jobless claims. So if we go to labor, job openings, I think this is the jobless claims. So you can see August 4th, June 30, June 2nd, May 5th, March 31st, March 13th, February 5th. So no, these are not the... Okay, I'm not exactly sure. But anyway, on the Edge Finder, when it comes to the labor data, NFP, ADP, unemployment, you have the claims. This is the jobless claims. I'm sorry. It's Monday. I'm still getting into the groove, so I do apologize. Anyway, so this is what you get. August 20, August 13, August 6th, July 30, July 23rd. So every week you get the jobless claims. And these are the revisions. So that's not the moving average. That is actually the revision. Okay, and you can highlight. Can you highlight? Like this? Kind of. Anyway, I wanted to mention, if you want to get the Edge Finder, if you want to join the A1 Trading Discord, the paid section, get all of my trades, plus Nick, Chris Bulver, Ivan, Alan, and a bunch of other successful traders, well, don't forget, you can use code MARKUP to get 15% off Edge Finder, A1 Trading Discord, and the Stockbox. So you can use this code to get a discount on everything. All of the links are in the description of the stream. And if you want to join, also let me put in the right media asset, which is the Discord. If you want to join the free Discord, there's a link in there as well. So you can either scan the QR code, you can click the link in the description, or you can find the link in the comment section. So I have the link right now, and I will post it in the comments. Let's go to comments, paste, enter. Here it is. Okay, it's there. That's where you can join for free. USD Swiss. The fact that Besant is opening up Pandora's box basically on YCC for political reasons, like the midterms, will really hurt the economy next year. Lower rates will also actually decrease inflation. It's just classic government stuff. You know, like Yellen did it for Biden before elections. Now Besant is doing it for Trump. So it's classic politics. Now, the best case, the perfect scenario would be for the government to act like a silent referee and just doing its thing kind of in the shadows, in the background, and not trying to intervene in the markets. But that would be a perfect scenario, like in a football game. So if you ever watched football, like the best games are the ones where the referee is just in the shadows, not trying to intervene too much, not being biased on one side or the other. That's what you want for the markets, but that's not the reality. So if you're a trader, you need to learn, or you need to face facts as to what is the reality. And the reality is that the Besant, that the Fed, that Trump, they're all trying to manipulate the market and swing the market in one direction. That's how we need to trade it. So for me, I was positioned long on the Aussie dollar before the announcement last week. So I took it in the morning on Wednesday, and the announcement happened later that day. So the dollar went down and Aussie dollar went up. And that was a pretty good position to have. You could have also sold Euro Swiss. That was a big drop. You could have sold the dollar Swiss. That was a clean one. That was a massive drop lower. So there were definitely trades you could have done. USD/JPY had a drop as well, but a small one, I would say. Stocks, I don't think stocks did much. Yeah, stocks kind of didn't do much. Do you prefer Forex or foreplay? I think you meant to say FX replay, or you meant to say foreplay, but that's not for this channel. I don't do a lot of back testing these days. I mostly do forward testing. Okay, so I mostly do forward testing because I found forward testing is like where you get most of the edge. Yes, you do need to back test, and I've been through the back testing. I did the back testing. I put in the time. Okay, I did my part. Now it's forward testing. Any new strategy, I heavily focus on forward testing with smaller risks. So right now, I am forward testing a strategy on stocks. So I'm in 2 stocks at the moment, VLO running quite nicely and PSNL just knocking it out of the park. So this is a massive runner. 6R, I did take half off, put the stop loss to break even. So I'm basically buying stock breakouts. This right now is the best time to be running or to be trading stock breakouts. So if you look at the SPY, basically is, okay, it's no longer above the 10 EMA, which is a bit of a problem. That definitely is a bit of a problem. When did I take this PSNL? Let me take a look. So PSNL, I took it on Wednesday. What was the SPY doing on Wednesday? It was above. So now it's below the 10. It's above the 20. So now is not really the best time to be taking stock breakouts, right? Because we're kind of in between the EMAs. So the best time to be taking stock breakouts is this, when the SPY is clearly exploding up. Or this. This is a perfect environment. This is a bad time. This flat price action is bad. This is bad, a bear market. This is bad as well because it's chop. This is bad, but this is good again. These periods of swings to the upside. So for this strategy, you need the price of the SPY to be above the 50, the 20, and the 10 EMA. Then you can focus on individual stocks and you can look to buy breakouts. See, this was one. So you got the pole, you got the flag, and you broke out of the flag. Then PSNL, you got the pole, you got the pullback, you kind of consolidated here, and then you got a breakout. So that's how I play this strategy. They are using their credit card to pay their mortgage. This reckless spending is bullish for gold. Long-term, yes. Long-term, yes. But I'm a short-term trader. I'm holding for a couple of days. So that's not a reason for me to buy gold with a tight stop loss. The big macro views that take years to play out, I don't want to use that in my analysis. Forward testing also allows you to feel the emotions. Absolutely. Like back testing is one thing. Forward testing is 5 times more valuable. I did a lot of back testing in college, but I prefer a standard forward test now. I am the same. GPNZD, Americans are going poor, that's for sure. Euro Swiss analysis. Euro Swiss. Let me pick one because I have 1 more minute, and then we have Alan coming onto the show. So what do I want to analyze? I would say Euro Swiss. Let's do Euro Swiss. So let me take a look at the top setups. Euro CHF. Neutral. Personally, I'm bearish on the euro. Winter is coming, like in the Game of Thrones. There's an energy crisis. Oil or Brent is definitely elevated. That means Europe will need to pay more money for energy. That can hurt the companies in Europe. That can hurt the general consumer in Europe. So going into this winter, I'm actually bearish on the euro as a currency. I think this energy shock could be bad for this up and coming winter. For the Swiss, it has gained a lot of value on Wednesday last week, but if it's gonna replace the yen with it being a borrowing currency, then it should lose value, if I'm being honest, because the yen kept on losing value because it was the currency that you borrowed. If you look at USD JPY, it was just going up and up and up, right? That was because people sold the yen, borrowed the yen, and they bought the dollar to get a high yield. So the next currency can be the dollar Swiss, for example. So the Swiss franc could lose some value on that. Anyway, I have crossed my time. You have Alan coming on in 30 seconds. I wish you guys good luck in the markets. You can catch me again in, I think, 1 hour during the joint segment. And yeah, that's it. Good luck.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Marco, my bad, man. My bad. I accidentally put the ad a little bit too quickly there. Marco, my apologies. I just wanted to tell you, man. Good morning, everyone. Hope everyone's having a great Monday. We have another start to a great week. Markets are somewhat quiet here, with the only exception being gold. Man, gold is just running up higher. I'm just watching this from the sidelines, wishing I was in it, but we just have to wait for pullbacks. Marcus says he will have his revenge, man. Don't tell me that, man. Don't tell me that. Yeah, my apologies, man, for sure. I feel bad. But guys, pretty slow start to the week, I would say. I'm watching for pullbacks in the dollar, right? So you are seeing that today on currency strength. As I just logged on here, dollar is the strongest one out of everyone. So I am looking forward to that. Hopefully we can get some pullbacks opportunities. I'm looking into the 200-day moving average, where ultimately I'm looking for sellers of the dollar to continue this leg lower. And in that case, I could participate in things like euro dollar to the long side, dollar Swiss to the short side, et cetera, et cetera. So I'm looking for this one. My favorite one of the two is going to be dollar Swiss franc to the downside. You also have that on currency strength. You can see that Swiss franc is actually pretty strong here as well. It's been consistent with that. I mean, if you look at just early hour trading here, you can see that the brown one, which is Swiss franc, was at the very top, right? So it's been consistently very strong alongside the dollar as of now, but I like to see that relative strength there. So if you do see some dollar pressure, then I would imagine that Swiss franc kind of stays where it's at, and that would really feel this to the downside. So I'm looking forward to that if it does come. We are at the 38.2% retracement level right now. However, on DXY, we're still waiting to tap into that 200-day moving average. So I'm hopefully looking for a tap into the 200-day, and ideally that matches up with dollar Swiss hitting the 50 or the 61.8. Those are the key levels that I'm looking for to go ahead and take it further. Also like euro dollar 2, waiting for a pullback into the 200 near that area. I mean, if we just measure this leg out, this recent leg higher, we have this area here, the 38 and the 50, right up in between the 200-day moving average. So I love that. So I'm waiting for those things. But really, that's all I'm doing right now is like, I know that I want to participate in dollar to the downside. You also have long end yield softer today. So you do have the 10 here lower. You do have the 30-year lower, which is actually looking quite well. So this was that candle here when Scott Bessent, basically said they were going to do the bond buybacks. You had some of it retrace the day after, and then the day after that on Friday. But now you're starting to see red, so we'll see how that finishes off. But if you do start to make progress in the long end yields, I love that for continued dollar softness there. So that's what I'm waiting for. Euro dollar long, dollar Swiss short. UJ, I am looking for, hopefully we tumble past the 200-day moving average. That way we can get some better prices. But ultimately, the way I'm playing this one, or the way I would want to play this, is by buying UJ long term. Take advantage of the carry trade for as long as it lives on, and also capture some positive swap. So that's what I'm looking for. UJ, I like 155. I like 153. I like 156 also. Once we get into these levels, though, like 156, 155, 153, I'm not going to be trading this by any means. I'm going to be I'm just going to be taking small positions here to the upside, dollar cost averaging, and just building up a solid position at some pretty good discount levels. And then ultimately just writing the appreciation with positive swap. So that's my approach with dollar yen, contrary to the other ones where I'm bearish dollar. This one, it's more of a medium to long term type play. So I could care less about any drawdown. In fact, I embrace it because that means I'm just going to get better prices down the line. So that's what I'm looking for. Let me go ahead and look at the chat here for you guys. What is the best way to improve your love prowess? No idea, my friend. I'm sorry, I can't answer that question for you. Good morning, Kier. Hope you're doing. Hey, Alan. How you guys doing, man? Good morning to everyone. May you see pound kiwi, please? Yeah, let's look at pound kiwi. Again, I said this last week. I haven't been given the minor pairs much love, if I'm being honest for you. I've been very happy with my major currency, just playing the dollar and gold, of course. So pound kiwi here off the rip, it's neutral. So that just gives me that bias. I think I covered it last time, but I said basically, you're at this channel here. Basically, if you're at the lower end of the channel, if you have a bias to the upside, then you could buy, market order buy, stop loss below structure, target the 200-day or this level right here. If your bias is to the downside, then I would wait for a break and retest, stop above structure, and then I would target like somewhere over here with this other level of the zone. That's pretty much how I would play the currencies. I play currencies zone to zone, really. So that's how I would play this one in particular. This seems to be a very range bound currency, as you can see, right? Obviously. And then within this big range, you have a tighter range that we're operating under right here as well. So very, very choppy currency. But yeah. Can you look at dollar CAD? Yeah, man. Dollar CAD. We are getting a pullback here, which is really, really nice. Dollar CAD has been just straight sliding lower. So I would imagine that for all the short sellers out there, maybe you're seeing some profit taking, right? I would imagine that you are seeing the dollar up today. So I would imagine that this is contributing to dollar CAD's upward movement today. But the way I see this chart is like likely you have any bump here gets faded, especially as you're at the 200-day moving average or this level right here. I would be very mindful if you're a seller in dollar CAD. I'd be mindful of this and this. If you tap into here and you start to see some downward pressure, then likely than not, the momentum to the downside continues. And then if you're a seller of dollar CAD, I would wait for a pullback, wait for it to see how it holds here, and then continue the next leg lower. So that's how I see dollar CAD, but very, very strong chart. You've had recent data for the US coming in weak, and then recent data for Canada coming in quite good. So that's what's happening here with dollar CAD. It is a perfect illustration of pairing something weak against something strong. Happy New Week, ladies and gents. Yes, Happy New Week, man. Do you use the 200-day SMA often to look for retracement levels? Vincent, that's a great question. Usually the 200-day moving average lines up with great levels. You know, if I'm not, like, for example, like this right here, this euro dollar chart, I am just using a basic Fibonacci, retracement thing. You know, you get the low to the high, you mark it up. And likely than not, the 200-day moving average lines up with these levels. So in this case, for you with euro dollar, the 200-day moving average lines up with the 38.2. And so for me, that just gives me added confluence. Like if I'm going to pick anywhere to buy euro dollar, it's probably going to be here where you have the 200-day and the 38.2, right? So that's where that's helpful at. So for the most part, yeah, sometimes the 200-day moving average does kind of help me with the key fibs. If it lines up, it's just an added influence in my personal opinion. Dollar CAD, right? Like I would imagine the same is true if you measure. I mean, I don't know how you would measure this one because it's just a straight shot to the downside. But if you do this, not a really good illustration, but something that's cleaner, I would imagine has that as well. Like let's say Aussie dollar. What is Aussie dollar doing? I wouldn't think this is a clean chart either from low to high. Yeah, not too much. But it's just added confluence is all. Kier got a breakout in pound CAD. Been in for days now. Okay, let's see that pound CAD. Nice, man. Nice. That's very clean. Very, very clean. I had something going on here. I don't know why. I mean, I just wasn't paying too much attention to it. Let me remove this alert. Don't need that anymore. Congratulations, Kier. You are off to the moon, my friend. Off to the moon. Morning ball out. How you doing, man? Wilson says gold still has room to run this time. Retail is participating in addition to institutional buyers. Algorithmic CTAs have been net short still and will continue to stochastically buy. Man, with gold, it can really keep going. That's the thing. There's nothing stopping it at this point. It's kind of in a position where it wins in most scenarios. If you have yields lower, gold wins, and if you have yields higher, but because it's pricing in risk, that's still fuel for gold. So it's kind of like in this win-win scenario. It's just a matter of being patient and waiting for a pullback of some sort. So for me at this point, I'm watching the 200-day moving average. If you were to pull back into the 200-day, I would be a buyer of gold. I'm no longer looking for something like the 4,200 or 4,100, not those areas anymore. I'm just willing to go ahead and buy on any meaningful, decent pullbacks with some structure there. So the 200-day moving average is one for me. I'm watching, or even something like this level right here. So this was resistance. It seems like one, twice, three times, 4,400, give or take, somewhere around this level. This zone, I'm a buyer of gold as well. So I'm just being patient with it. Like many other people, I'm sure that you guys want to buy it. You guys want to participate into the trade. I'm going to just let it do its thing because you know what's happening? What's happening is most likely you're having a lot of people that are probably not as disciplined as us, right? So here at A1 Trading, we're a lot more disciplined, right? We're going to be waiting for the pullback. But what's going to happen is you're going to have the crowd that is not patient, and they're going to be jumping into gold longs here, just piling in, gold long, gold long, gold long, no matter what price it's at. And what happens with that is that you have crowded positioning at that point, right? And so what happens is something along the line, whether it's at 4,700 or 4,800, gold's going to be rallying higher. There's going to be some kind of thing to spook the market a little bit. That's not going to like deter from the gold long story, but it's going to spook the market. And when you have crowded positioning right here, that's where you get these quick pullbacks to where we want it, right? Right where we want it, you'll get the quick pullback, and then being patient plays out, right? So just be patient. Let the crowded positioning, let the FOMO, let all that stuff do the thing to the undisciplined traders, and we just wait and see, and we'll get in when we get in. Good morning, Alan. Last week I asked about EuroCAD and you said it's neutral. It looks like it's breaking out. Please check if it's safe to enter. I can't give you the safe to enter green light, my friend. Nothing I say here is financial advice, but I can definitely look at this chart and see what I think from my eyes. So EuroCAD, yeah, this is just a very choppy chart. I don't know. I don't know. This is how I see it playing out, right? If I'm just saying this with no skin in the game, it's very easy for me to make these calls. But EuroCAD, I would imagine that you continue some sort of this motion, right? And given that the price right now is smack in the middle of this range, so the risk to reward is potentially not there. But you know what? Let's look at the edge finder as well. EuroCAD. Also getting a neutral reading. It doesn't make me super excited. This chart isn't like the most exciting chart for me. It's not the most like appealing chart. So with that, I'm gonna stay away from EuroCAD. Ball out says, Alan, you know I have a dislike for FX, but the trade of the week can be shorting dollar. Well, Ball out, it seems like you're coming to your senses, man. Congratulations. Welcome to the FX side. It's not always in play. I will give you that, my friend. It's not always in play, but when it is in play, it can be quite nice. My trade of the week last week was dollar switch to the short side. That was a really good runner. So was euro dollar. I'm kind of expecting the same type of situation to unfold again, especially if I'm monitoring yields here. And I do see that the long end is starting to cool off more. The 10-year, even the 2-year now is right on the day, technically. I'm definitely watching that trade. So to me, that's kind of like the next best obvious trade alongside gold. So with DXY here, I am looking to see what happens at the 200-day or this 99.5 level of support, probably term resistance. That's what I'm looking to short dollar. So yeah. There's core PC here says there's core PC on Wednesday and jobless came on Thursday. So do you wait it out for the dollar pairs or take it when no. I take it when the price action presents itself. You know, I'll take it if it's pretty strong technicals. If I have everything I need now, I just take the trade, and the news releases will either help my trade or just get me to stop loss quicker. But I really don't put too much emphasis on those. If it was a brand new position that I'm looking to put on and I'm right before non-farm payrolls and everyone is expecting the non-farm payrolls to give us more clarity, then at that point, yes, I would probably just wait for the news release to pass by and then I enter on that. But because the kind of path has already been paved here for dollar to the downside, and everything has been confirming it along the way, it's not like this new thing. So I'll just take the trade. Someone said, "Is trading depression real?" I don't know. Maybe. I don't think I've ever been like super sad about trading. I don't know. You guys answer that for me in the chat. I've had rough moments in trading for sure, but I was very self-aware of what was going on. Vincent says, do you wait for confirmation on the 1 hour or do you enter on a fib level with a with order? So I can show you. Am I logged into this? I'm not. So I would probably have to log in here. Give me a second. Hopefully it's already logged in. What's going on? Session restore fail. Click connect to try again. I have one attempt left. What? Let me just, oops, no. Okay, I can't log on right now, but let me show you what I mean. So do you wait for a confirmation on the 1 hour or do you enter on a fib level with an order? On this account, there is a limit order on euro dollar somewhere right here, somewhere within here. Don't know the precise level off the top of my head, but it's right here on this 38.2% fib level near that 200-day moving average. So in this case here, I am just waiting for a pullback. If price gets here, I get entered into the market, and I'm hopefully waiting for something like this. Now, some people would say, wait for the confirmation, the 1 hour. I think that when you go for the 1 hour for confirmation, what you're really trying to do, and you may not want to admit it, but what you're really trying to do is snipe the perfect entry. And I really don't believe in that. Me personally, I'm like, look, the asset is going to do what it's doing. It's going to chop around for a little bit. I just want to be in at a general area let the trade breathe. So if I get tagged in at the 38.2 right here, and price does this immediately, I'm perfectly okay with that. That's my expectation, is that my trade is going to initially go into some sort of drawdown, right? For me to just get in and go straight up is unrealistic for me. So for me, I expect that I get tagged in, and then eventually I hope that it works out in my favor. But I think when you go to the 1 hour, not only are you trying to snipe entries, but you start to introduce noise into the picture as well. So I personally just wait for the fib level to hit, and continue. Christian says yes. Yoshi says it's real. Yeah, trading isolation is real for sure. Especially if at one point I was only trading, right? Like I had no other things on the side, no other projects, nothing like that. And swing trading really only takes about, I don't know, 2 hours of your day max, or 1 hour of your day. And so you had like a lot of time on your hands. And so there was definitely a lot of fulfillment gap there. And that was tough, but then you fill the gap with things that you are passionate about. Set and forget style for sure, man. Set and forget. I mean, obviously monitor the position. If you know that if you're in a position and it's, you know, going to be influenced by a key data release, because that key data release would either sway the macro theme or the macro kind of environment or not, then pay attention to that. But for the most part, yeah, just set and forget, let it do its thing. Like with dollar Swiss, you guys remember, right? With this trade here, I entered short. It was just chopping around for a couple of days, right? It even got close to taking me out a little bit, and then it just worked out one day, right? It dropped big. It seemed like an intervention on dollar Swiss, but it really wasn't. But dropped, almost 2% in one day. Just it'll come. Consecutive losses can be bad for you, Sauce. Consecutive losses are part of the game, man. If you have 7 losses in a row, right? That could seem really harsh, but 7 losses in a row, you are still within the range of normalcy. 7 losses, that's easy, man. Once you get to like 12, then you have to ask yourself some questions. But 7 losses, that is very, very normal. So don't beat yourself up. Yoshi says he thinks it also depends on how you look at the losses, for sure. And if those are 7 losses of 1% per trade, now you're down 7%. But if you have 7 losses and after 2 losses, each loss, you dialed it down even more. So you go from 1% to 0.5%. And after those 2 losses, you go to 0.25%. And after those 2 losses, you go to 0.1%. Then your drawdown's really manageable. You know what I mean? So it's really a matter of like, are you over risking? And when you start to see that you may be going through a little bit of a trading funk, you got to really dial that risk back. That way, it's not a 7% drawdown, but more so a 3.5% drawdown. And we all know 3.5% is very manageable to overcome. That can come within 2-3 trades or a couple weeks. That's super easy, or not super easy, super manageable. So I really don't believe in static risk management, like 1% per trade. I really do not advise that, because that just forces you to risk 1% in times where you probably shouldn't. We should dial it back. Silver is going to give a pullback soon. Let's see. Silver. They're both like, let's see, how far away is silver from the pullback that I would, if I were a buyer of silver, I'd be looking for a retest of like this level right here. So how far is silver from that? Let's see. Silver is about 4 to 5%, 4.5% to 4% away from that. And gold is 4 to 4.5% away from that. So they're moving in line for sure. So with gold, like I'll be waiting for a pullback of this level, and with silver, it's dang near the exact same level. So we'll see. They're moving in harmony right now. trying to control the outcome of a trade is likely to grasp the wind. I did a segment with Tiger, an interview with him, and he was working on a project. And one of his projects, it was like an educational based project, and he had a really good focus on basically not just like your psychology and stuff, because that's, I think, is somewhat overrated, but he had an emphasis on risk management, and I really admire that. And I feel like risk management is not really talked about in trading. It's mostly like the perfect golden entry, which is like your 15-minute strategy that you just wait for this one pattern every day, and you're gonna retire in no time. And trading psychology, which trading psychology is, I feel like, is just like a blanket statement that you can just put on just to mask any other problems that you're probably ignoring. And I think the biggest problem for like the trading psychology is literally just risk management, and that's the only variable you can control. Like Prizark said, nothing else you can control, right? So if you put a trade on, the only thing that you have control over is how much you're putting on that trade and where your stop loss is and your take profit is, right? That's the only thing you can control. You cannot control whether the president's going to tweet something out that's going to invalidate your trade. You can't control whether the U.S. Iran's going to escalate again. You can't control what the next non-farm payroll rules are going to be. You can't control anything. You can't even control if there's going to be a bomb dropped on any given place. I don't know, right? You can't control any of that. The only thing you can control is your size. So if you put on a trade and you assume it's going to hit your stop loss, that's what I do. Every single trade that I put on, I assume it's going to hit my stop loss. And I ask myself, well, what does that mean to my overall where I'm at right now, right? If I am experiencing 7 losses in a row as of this next trade, and on this next trade, I'm like, if I hit stop loss and it turns into 8 losses in a row, what is that going to do to my overall situation, right? If I'm already 7 losses deep, I'm probably going to dial this risk by a lot. If I am 4 wins in a row deep, I will probably also reduce my stop loss because I know that a losing trade is on the horizon, right? So like you have to really ask yourself, the only thing you control is your risk size. Dial it back, man. Dial it back. I bet you that if you have a position size that is so small that it would only bring your account down 0.1%, I bet you that your trading psychology problems will be fixed. I can almost guarantee that. You will not have to look at the trading screen every single hour, every single minute. You will be able to go on a walk. You will be able to sleep at night if you just dial down that risk. And sometimes dialing the risk is just a way of you regaining some confidence. So like for me, in times of drawdown, what I do is I try to stop the bleeding. And what I do by that is by just reducing my risk. That way my P&L doesn't drop, right? So even if I have some winners or losers, it's just starting to flatten out a little bit. And then once I gain some confidence, then maybe I can start upping the risk and climbing out. But it's just a matter of like stopping the bleeding. Saul says, man, the only thing I do for a living is trading. Well, I love markets. I love trading. And that's why I've kind of done stuff alongside that are still within the trading space. That way I'm just fully immersed, But I would definitely encourage having something else to kind of help you out in times of drawdown or in times of, flat months, negative months. It's also too, like for fulfillment purposes, it can get quite lonely when you're just only trading. What if it skips stop loss? Then that fear always creeps out. Not too sure how to interpret that. What if it skips stop loss and that fear always creeps out? Prisoners, I disagree. Too small of a position and greed takes over. There's a happy medium, I would say, but like if you're in heavy drawdown, right, and you just want to gain some confidence back, you want to stop the bleeding a little bit, I would really encourage just super small positions. That way, that it's not you, right? Or you can even determine like, dang, maybe I need to readjust my strategy or my approach. Like if I'm still making those mistakes. But guys, my time here is running to an end. I will be back in about 30 minutes or so. I'm going to pass the show off to Nick. This was a fun segment. Always appreciate it. Happy Monday, everyone. I will see you guys back in just a bit. Bye-bye.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show.
Good morning, everybody. Hope you're doing well. I'm here for another week of session. You know, I have, this is going to be the longest streak of live streams I think I've done ever. I've gone every day live streams since a week and a half ago, 2 weeks ago, because I did the live streams over the weekend. I did end up doing pretty decent in the competition. I didn't place in the top 10. If you're unsure of what I'm talking about, this weekend I participated in a gold trading competition. There is a new product offered by a sponsor of mine that they did a weekend competition, and it was a lot of fun. We traded gold on the weekend. It was wild. And honestly, I actually really enjoyed it. I spent 4 hours live streaming this weekend doing that. And I made, I think, so let me just give you some stats, because I guess I ended up making 1,800. It's either $1,700 or $1,800 in profit. Let's go 1,700 just to be safe. 1,700 on the 10K account. So I made a 17% gain in 2 days. Is that my standard way of trading? Absolutely not. But I ranted about it on the stream endlessly about how trading in a competition completely different than standard trading. You can't go slow and steady on a weekend trading competition. So I went aggressive, and I effectively traded gold only on their 24/7 chart that they just launched. And I was able to generate somewhere around 17, I think it was like 15 to 17% after commissions, etc. What's kind of fun about that, though, is that doing a trading competition made me think a lot about like how just in general, what you are trading really can change your strategy and risk management. Like, for example, if you're a funded trader, it's different. If you're somebody who trades in trading competitions, it's different. If you trade during the evaluation phase of a prop firm or during the actual phase of being funded, these are all different battles, right, that traders can fight. So I had a lot of fun with it, but I did not place. Top 10, I think, was 40%. Like, at least the last I had checked, like the number 10 spot was at like 40% on the weekend trading competition. So I didn't place, but I was I was in there, I did okay, and I had a lot of fun doing it. It was honestly, genuinely so much fun. So I hope to do another one in the future. Anyways, S&P 500 here is a little soft on the day. Nasdaq also down a little bit on the day. Following through, I guess, from last week's kind of sleepy rollover in the Nas, we also saw some freak out last week, specifically in the bond market. So let's take a look at the bond market, see what's going on over there. So the 10-year yield has really not backed down much from its highs. I think that this persistently, I was listening to people debate this morning about whether or not NVIDIA earnings this week or Kevin Warsh's commentary this week, which he's speaking, and it's supposedly going to be a big, potential market mover, the whole Jackson Hole Symposium stuff kicking off. This Fed mandate stuff or NVIDIA, which one's going to be the bigger market mover? What do you guys think? I'm curious. Do you think, now obviously if you trade gold, you care more about the Fed, but if you are watching the stock market, for example, tech stuff, NVIDIA is very, anything tech related is going to be watching what Jensen Huang, the CEO of NVIDIA, will have to say. So you have a lot of potential market moving stuff. So I personally am going to lean more in thinking that Kevin Warsh's commentary is going to be pretty market moving. I think that the market is going to expect him. So here's the theme with Kevin Warsh recently. The theme with Kevin Warsh has been he speaks hawkish, but we're not getting any rate hikes. That's like what people are kind of looking at. They're saying, you're talking about how, we're far off from inflation being in a good spot and how serious you are about that. And yet at the same time, where's the rate hikes? Right? That's the rub there is like, okay, the bond market partially I think is moving higher because they're like, okay, this Fed, we're not going to get, like, even if there's a good reasoning in the eyes of the market for rate hikes, we're not going to get rate hikes. Although there's a pushback on that, which is this week, he's got kind of an easier job ahead of him because if we look at the macro for a second, you don't have as much. Let's just pull up. Let's pull up the dollar here. You don't have as much pressure this time around. I'll tell you this. It's going to be a lot easier, in my opinion, for him to justify not hiking if that is the intended move. That's what I think they're going to do. I think they're not going to hike rates. I think they're not going to signal rate hikes. I could be wrong, but that's my opinion. Here's why. Economic growth, I think that they threw him an easy pitch here today because you have GDP growth, soft, services PMI soft, retail sales were worse than expected, consumer confidence, inflation was light, non-farm payroll was very light. So I think that it's going to be a little easier for the Fed this week to kind of be like, yeah, we're not going to hike rates. Basically not signaling impending rate hikes. And I think that narrative is going to continue to be the reason why gold drives higher. Now, the big issue for the Federal Reserve and for the Treasury and for the government in general is not really the short end. It's really the long end. And what I mean by that, bear with me if you are a beginner to fundamentals. Bonds, there's short duration bonds. You can go lend the government money for 2 years, and then you get, you get your annual coupons or whatever. You get your interest rates back as payments. If you lend money to the government, you get, for lending that money, you get returns. And then there's also long duration. So you can lend the government 30 years of your money and get paid. Theoretically, you should get paid more when you tie up your money for a long period of time in a standard yields market. That is what you get. And that is kind of the case that we're getting right now. Now, the bigger problem for the Treasury and for the government and for the Fed is not the short end, which is pretty controlled, pretty adjustable from the Federal Reserve. The bigger issue is the long duration, the long end of the curve, as they say. This is not set by the Fed. The Fed does not choose this. The market buys and sells bonds based on what the market thinks it's worth, just like a stock, right? And so what the concern is that if this continues to push higher, that puts a lot of pressure on long duration assets. Notably, for example, technology stocks. Technology stocks are things where you have to invest, you have to borrow money for a long period of time, long into the future, you're seeing a payoff kind of thing. So I do think that the number one threat to the market right now, the stock market side of things, my opinion is that this keeps driving higher. If that drives higher and higher and higher and does not stop, and people, look at the Scott Bessent stuff and they say they're trying to talk the market into supporting bonds, and that's not working, that genuinely I think is one of the more concerning things that could take place in the market. Nick, any thoughts on Bessent's Financial Times article yesterday? Alan, I actually didn't see it. What's the short end version of that? I'm curious. Yeah, I don't think hikes are very likely. It seems like you guys in the chat are on the same page. We got several of you guys saying something similar. Yeah, I don't think the Fed's very likely to hike. I think that's why gold is cheering, right? Gold is higher. Dollar's kind of flat here, but it really is a gold story here. Once again, this week we've got a really big push going up. 1.3% gold is today. Maybe also helped by not anything crazy happening in oil. Yeah, I think the story continues to be watching the bond market, watching what goes on with the Treasury, their campaign of, one of the most obvious things, that is one of the most difficult things, would be if the Strait of Hormuz were to open up. That would be a huge inflationary pressure relief valve. But right now, that does not seem like a very likely scenario. For months on end, we have heard, straits about to be open or negotiations are going well, only to see, the other side kind of say like, nope, they're doing terribly. We're not on the same page as the U.S. We're not even talking to the U.S., et cetera, et cetera, et cetera. That being said, oil has surprised me. The fact that it has not risen more than that is pretty impressive to me. At dawn begins an economic. Oh yeah, yes. The announcement of the economic D-Day. From what I've seen, is just heavier sanctions on any and every ally of Iran. And I think the thing to take out of that, Alan, I think I did read a little bit about that. I had a super busy weekend, so I wasn't able to brain rot Financial Times stuff all weekend like I usually do. But yeah, I saw a little bit of that. And I think that the big one in there is China, right? Like it's really, are we going to get another round of tariff drama, economic drama with China? That would be maybe the thing to take out of that and watch. I don't know. It's pretty impressive though that despite that, tech stocks barely budging. I mean, you got a little bit of downside here. S&P 500 just mildly off of its all-time highs. What that tells me is that the market just doesn't fully believe it right now. It doesn't fully believe that things are going to get meaningfully worse. And I think the market is really, I wouldn't say that that's a bad take from the market. Why? Because their number one mission right now, the Treasury, the US, the government, feels like, my opinion, is to protect the long end bond market. And if you go out and start more, stuff, it could act to worsen that story. The market knows nothing. The longer I have traded, the more I have studied markets, the more I actually realize that the market is very smart. Maybe you disagree with that, and that's valid. Most of the time, the market is way smarter than I thought it was. When I first started, I was like, oh, market's getting it wrong. Rarely does the market get it wrong. Sometimes it does. But generally, the concept of, in my opinion, trend following, is still an effective approach because a lot of times the market's right. Think about it. If you're trend following, if you're like thinking market's got it right, I'm going to kind of follow along, and that works, it would make sense that that would work because there's something there, right? It's so interesting how I'm not going to say that I'm not a fan of the full efficient market hypothesis, but pretty efficient. Yeah, pretty efficient. And it only makes sense when you actually think logically about it. Market prices are moved by buyers and sellers. A particularly big buyer can move the market more than small buyers or sellers, right? Think about this. It's all greed and inflation. See, I don't buy into that. I disagree. I disagree strongly. Here's why. It's not manipulation. It's rigged. It's not emotional people freaking out that are just getting it wrong. It's the smartest ones in the room that move the market the most. It only makes sense. It's a zero-sum game, just like betting odds. At the end of the day, who moves the line? Who moves the stock price? Who moves the market in general? People that have the biggest budgets. Who typically has the biggest budgets? The smartest traders. The best traders, the best investors naturally build up their account. By definition, a good trader, a good investor has a lot more capital over time. Why? Because they make money. They're good at what they do. The best traders, the best investors have a bigger and bigger mountain of money that they are moving around in the markets. They're the smart, savvy traders. So naturally, who's moving the markets the most? The smartest traders. Does that make sense? So it only makes sense that markets are smart because the best, smartest players are at the top of the game and the ones moving the markets the most. It doesn't mean the market is perfect and that you can't catch trades and that sometimes it gets it wrong. I totally agree. I'm pointing out, though, that just the idea that, oh, markets are rigged and they're all emotional and they're getting it wrong all the time doesn't actually hold any weight, in my opinion. From my understanding, if you're a good trader, you make more money. So at the highest level of this game is people who have amounted massive wealth from being very good at generally playing the markets. So by default, the market movers are the smartest traders. So markets are moving based on what the most intelligent, most successful traders are generally doing. But even the best traders are not right all the time. So to that point, sometimes they do get it off. So that's my opinion. Why is every country going near or at all-time highs? Easy. What's the number one driver of stocks? What's the number one reason? Anybody know? What's the number one reason that stocks move higher or lower? Long term, this is by far and away the most correlated reason stocks move up or down. You ready for it? Hint, this thing is also at all-time highs and at the most impressive growth rate that we have seen in like a decade. It is the E word, earnings. The number one far and away correlated thing to stock returns is earnings. And earnings are incredible right now. The earnings growth rate of the S&P 500 and globally, we're seeing a broad earnings rally. That's why stocks are at all-time high. That's it. At the end of the day, people are willing to pay more for stocks because they're earning more. And as long as that is the case, the stock market's hard to topple over. Look, I'm not necessarily saying, oh yeah, stocks are perfect and I think they'll go up forever. No, I would like a retracement too. I'm not countering or arguing that like a retracement is when I generally like to buy stocks, etc. But to say it's all rigged, it's manipulated, there's no reason for the market to be up here, I don't think is giving credit to where credit is due. Corporate earnings are ginormous. You may disagree and say, well, I think, or you can't disagree with earnings being incredible. You just simply cannot. It is a fact. What you could argue, the debatable side, is that in the future, do you think those earnings are going to continue to grow at the same rate? Or do you think something is going to go wrong and something is going to change and earnings are going to slow dramatically, that would be a different story. That's a debatable topic. But what is not debatable, earnings are incredible. Like, they're monstrous. And so that's the only reason why you've had yields moving higher. You've had mixed economic data for a while. But the AI story, the earnings of corporate America are ginormous, right? You can't argue if that's true or not. You could argue, it's just me again. Yeah, that's fair. Like, rigged numbers and circular finding, that's a debate. That's a talking point that people who are skeptical about the earnings could have. I'm just pointing out that on an objective, looking at balance sheets, looking at earnings, net returns, net earnings of companies, it's not a debatable fact that their earnings have been incredible. What is debatable is whether or not they will continue to be. You see what I'm saying? So that's my thought. I don't believe the economy is awful. Yeah, I mean, it's, again, to this person's credit, I'm not a big fan of, shouting markets manipulated, et cetera. To me, that is not really a take that I think carries a lot of weight. We discussed that, but more so the claims of like circular financing and worries about whether or not earnings at this rate are sustainable, or whether or not crowd sentiment is overwhelmingly too bullish or something like that. Those are fair talking points. Those are debatable things. And then you may make the speculation, the guess, you can call it your educated guess, right? You think the market's going to move lower. That's fine. That's fine. But to say where we are is, the earnings have not been good, or that it's all a lie, that's just, that one's a harder one to process. So anyways, here's my thoughts on some things going into this week. NVIDIA earnings are huge. That's going to be a really big, important story to cover. I also think that the bond market stuff will be really interesting to hear from Kevin Warsh, what his take on stuff is. I generally remain bullish gold. I think that's the easier trade out there. While I don't have any short-term long positions open, I still have my, I did some short put positions on GDX. Those have all closed out for profits. I did that down in these areas. So I don't have any fresh positions on. I have long-term, open bullish positions on gold. Would be willing to, however, look for pullbacks on gold. I've been waiting patiently for them. I may not get them. If they happen, I'm interested in buying gold on a retracement. If it doesn't happen, then go bulls go. I'm just cheering on the people who have caught this move. This has been awesome. Silver also looks really good. Silver pushing to the upside here. Although, look at the outperformance today on gold. This is an impressive rally for gold, up 1.34%. Silver up 0.4%. Really solid. TraderNick question: why do you mark your charts that way, and what time frame do you use to mark those levels? So I mark critical spots on the chart that I see very obvious support and resistance at. There is a bit of subjectivity to it, as with all analysis. Check this out, right? This is a pretty critical spot where we toppled over, sold off. This is an area we found support. This is an area we found support. So I kind of mark these areas where we have seen really sharp pivots on the chart. And I also like to use Fibonacci retracement tools. Nothing magic here. No secret voodoo, black magic going on here. No, secret sauce. Just really simple technical analysis. Primarily what I do is macro and fundamental analysis. And then I use simple technicals to enter and exit trades that I like. So I am generally a trend follower. I'm looking for trends, not just in price, but also in the macro. So right now, I generally like precious metals long. So fundamentals look solid here for the way, Edgefinder kind of looks at this. It looks at economic growth metrics, inflation statistics, and jobs market data to build a bias based on what it's telling you. Right now, what we're generally seeing is some softness in the labor market. We're seeing cooler than expected inflation numbers, and we're seeing not as hot as expected economic growth. Is the economy falling apart? No, we're still growing, but we're growing at a slower pace than people had anticipated. Retail sales have contracted, although, again, PMIs for example, to state that the economy is just in the gutter, I also think is not fully fair either. You have PMIs at some of the strongest levels across the G7 nations. We have manufacturing and services PMIs above 54. 50 is neutral. Above 50 is growth in the economy is expected by purchasing managers across the economy that have been indexed on this metric here. So we generally see growth ahead, but maybe slower growth than previously anticipated. So that's been rolling over the dollar a little bit. And so that, I think, is a huge additional reason why precious metals have looked really good. The dollar index looks soft. I do think that that can continue if you rally up into these zones of resistance that I've got marked up. To answer your question, this is kind of a spot where we were finding support, broke through that level. So if we come back into that, I'm generally going to be a little bit more bearish. So that's my take on it. It's just me, 1, 2, 3. You can't believe any government data. It's just me. Can I take a guess? You are a gold bug. I bet you love precious metals. I respect the skepticism. You are, I too have my own skepticisms. I don't believe everything is rigged and everything is faked. I think that take is, personally, I don't think that is rooted in reality, but fair enough. You think that I'm not rooted in reality. So, I think we can agree to disagree. Cheers. Of course. Called you. You can spot stackers a mile away, especially when I'm one of you. I like precious metals. I understand the utility. I understand the value there, but I also think it's important not to be completely head in the sand and believe precious metals. Like, I've seen so many people who are incredibly bullish on gold and silver and have no memory or experience seeing precious metals in down markets, right? Like, precious metals can also have really poor periods, especially if the Fed were to get aggressive on rate hikes. I don't think that they will, but if they were, let's be open-minded. Let's be acknowledging possible outcomes. If the Fed were to, for example, hike interest rates, get aggressive, reduce the balance sheet, and they've done these things in the past, it's not impossible that they could consider taking some kind of measure to strengthen the dollar if it were to weaken dramatically, or get inflation under control and have to be more serious about it. And we saw that in 2022, where the gold market went sideways for multiple years here, right? So I think it's good to keep an open mind on whatever we're looking at. I personally am a big fan of trend following, price, and macro. That is the bread and butter for me. What I've found is believing I know what's going to happen gets me in more trouble than just following what is happening. Does that make sense? I appreciate you, man. I appreciate you. You got to have the absolute type traders. I know what's going to happen. Gold, there's no reason gold should go down. That is okay. So again, it's just me. I'm also a fan of precious metals. So don't hear me as coming at you, but here's my thought, right? Precious metals people, when the market for gold goes down, again, I am one of you. I like precious metals. When precious metals drop hard, they say it's rigged. And when precious metals rally, they say it's justified. So which one is it? Is the price of gold listed digitally here that we're looking at it, is it completely rigged and never trustable? And, oh, you should only own it. If you don't own it, or if you don't hold it, you don't own it type of thing. Or is it only trustable when it's going up? It is rigged. There you go. Thank you. Thank you for that. Share opportunities like Leopold goes big on leverage, and then Citadel jumps in and take their portfolio. Yeah, that's a margin event in general is something that we saw there. I think it, to be honest, was kind of a overblown story. The market itself didn't really move very far down on that news. Yeah, the chart doesn't lie. Trade what you see. Agreed. I think you can debate all day long whether something is rigged or not, and doesn't really change anything. At the end of the day, if it's rigged or if it's not, who cares? You trade the market that you're in. You can't trade a market that doesn't exist. So at the end of the day, I have been able to generate overall really consistent profits in my trading using that worthless rigged government data. It has been a key component. If it's so worthless, why does the bond market react to it? Why does the government, or the Treasury make sudden drastic decision changes based on the data that comes out? Again, if the government data is completely fully rigged, why do mortgage rates change in accordance? That's a very real thing for all of us, right? It's a real world impact. If that is all rigged, why does it change the actual prices for real people in the real world? I would argue that it's because it's not all rigged and that there is some truth to it. Are the numbers perfect? No. Is the BLS notorious for being inaccurate and needing to revise data? Yes. They revise it up sometimes, they revise it down sometimes. They have much more than up revised it down. I get that. But there's still truth in there, I would argue, because real world prices reflect and react to what is going on in the reported labor data. So if it was really rigged, like if it was fully like, oh, this is just so not real, then foreign treasury owners would call bluffs and completely go against reported data. But what you see generally is the non-farm payroll number comes out a certain way, and the bond market reacts in a way that is consistent with what that data suggests about the economy. So I think that there is, the way I look at government data is probably some errors, maybe some manipulation in there. I don't know. I couldn't prove it. I could shout rigged, it's manipulated, but I'm not a data scientist and I'm not able to go in there and do the mountains of work to try and prove that. But what I do know is markets are fairly efficient. They're pretty smart and they react and update based on what this data tells me. So I think that's my take on it. Conspiracies are fun, but there's times when they make sense and there's times where you can kind of logic your way through them. And it's like, nah, that doesn't fully hold up. My opinion. Feel free to disagree. Full of errors, right? We know everything that's government run is, but there's a difference between like purposefully misleading, changing data and just like incompetence. Like I think no one disagrees. There's a level of incompetence to what's gone on with the BLS. They've missed, their numbers have been so off. But generally speaking, you take into consideration revisions, etc., and they generally align with what markets have been doing. So, yeah. Anyways, I think it's a good conversation. It's a healthy conversation to have about integrity of markets, efficiency of markets. And one of the most dangerous things I see so many new traders doing is falling into the trap of shouting, it's rigged, it's manipulated every time they lose money in a trade, right? Please create a rigged scanner on the Edge Finder. I think that's coming. Yeah, guys, with that said, I've got to pass the show back over here to Alan Perez. He is back on for a little bit. So we'll do that really quick. By the way, if you are interested in using our rigged market scanner, it's completely useless. There's nothing of value in here. But if you want to scan economic data like I do, like a total buffoon, and it's worthless. If you are interested in using our worthless data, then check out the link that will drop here in the chat in just a second to try out the Worthless Edge Finder. With that said, up next, Alan Perez, just after this quick break. Stay tuned. Thanks, guys. See ya.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, I love that, right? The concept of if you want to see all of the rig data in one place, just get the Edge Finder. It's all in one place, man. I think we Nick unintentionally made that tool, but you can market to both segments, right? Whether you want the macro guys that are following the data, or if you just want to see everything in one place that's false, get the Edge Finder. But nonetheless, it is a tool for you. So go ahead and get that Edge Finder, a1trading.com/Edge Finder. You guys will love it. You can use code Allen too if you want to help out a little bit there. Feel free, be my guest. But Ballot says this is the best stream of all year. Man, clip it. If you want to see all that's false. Nick, I think the guys in your comment section that just, it is their job to just be contrarian against you. I think they would love that clip, man. I think that would satisfy them just a little bit. Yeah, what a great segment. I loved it. I was entertained too in the background. I enjoyed it. So let's go ahead and look at these rigged markets together. Whether you believe that or not, it is something that we have to encounter, right? So no matter your perception of it, you're here because you're trading it, right? So let's see how we're going to trade this market. So we're seeing a little bit of a, I wouldn't say a pop in the dollar. I want to see a pop in the dollar. I would like to get pullback opportunities to continue my dollar softness story, bear trades here, particularly on dollar Swiss. I really like. So the 50% retracement level is one that I'm eyeing there. I think we do have some room for dollar to take a sigh of relief, right? Maybe hit that 200-day moving average and then continue it lower. So that's what I'm looking at. Nothing really has changed, to be honest with you guys. Gold is one that I'm looking at as well, but again, it is just running higher. So it is just a waiting game for this one. There's really nothing I can do. With oil, though, I do like to see that it is down 1% on the day. I also do like to see that it is, as of now, holding off this bearish trend line here to the downside. So that to me is a good sign. Hopefully we can see oil continue lower. If you see oil lower, likely you see inflation fear scaled back. You have yields lower. You have dollar softness there. So to me, that is a chart worth looking at and worth paying attention to. And on that topic, I'm actually curious to see what CME FedWatch is doing as well. Let's see. Probabilities. What's it looking like? That's different. That is way different from what I've seen before. Okay, so it seems like we have one rate hike for December. We hold on that. And then we have another in mid part of 2027, right? And then we go back. Interesting. That's very different. We'll see how that develops. Let's see how the market interprets that. They are very close in hand, though. You're like swinging from like 30 to like 32. So that could be the reason why you have this little pop out to the side. It's not like it'd be different if it was like, 20% chance here and then 80% chance here. That would be different. But it seems like it's just the percentages are very, very closely tight together. So that's why you're seeing this sway. But nonetheless, it is worth looking at. Okay. Good to go. Let's see here what you guys are saying here in the chats, because you guys have been very, very fun today. Here comes Alan with more rigged info and commentary. No, man, no more rigged commentation. Wait till Marco teleports in. Even Marco is rigged. Come on, guys, give Marco some slack. He's not even here, man. He's not even here. You guys are rigging him out. Markets are definitely rigged to a certain degree. I could agree with that, I guess, to a certain degree. Okay, guys. All right, now that we have gone through all of that rigged market nonsense, let's continue on with our what we're here to do, which is analyze markets, see how we can trade them, and spot potential opportunities. With the S&P 500, I'm going to go ahead and create a new level here that I'm looking at here. Not that I'm looking for a pullback into this level, because I would really like a deeper pullback, but this is a level where I think that buyers can start to step in here, which is price is pretty close to it, right? So I'm looking at this horizontal level here at 7,600. That could be potential support here. Like Nick mentioned, earnings are doing really, really well, right? So that is, basis for this to continue higher. So I am looking at this level here, 7,600. If you fail the 7,600, then likely you go back to 7,300, where this was previous support that holded pretty well, I would say. And then obviously you guys know how I feel. Ideally, a pullback into the 200-day moving average, which is, how far is that from where price is now? That is about 7% away. I would like that. Alan, is your pickleball game rigged? Yes, man. I pay off the refs any chance I get. It is definitely rigged. I even bring cracked balls onto the court. So yeah, it's definitely rigged. Do you use seasonality for your trades? Sometimes. The way and why I say sometimes, it's because seasonality is inputted already into this score that we use on the edge finder. You know what I mean? So like, you can see where is seasonality right here. It is a score. It is part of the scoring system. And so if I use the edge finder score, for example, Eurodollar very bullish, then I guess, yes, I am using seasonality. But am I using seasonality in isolation to pick trades? No. I think it's better to use data as a collective to give you a really good score, or bias, bullish, bearish, rather than just nitpicking which one works for you. Because in macro, it's very easy to do that, right? You can easily ignore economic data. You can ignore inflation, and you can say, well, you know what, COT was really, really strong. Institutional people are buying, so that's going to be the basis for my trade. And so that's why you got to be careful. What's going on here? We can't save the report right now. Close it. Refresh. Should be good. But yeah, I like to use the edge finder scoring system, right? And with that comes, it's taking into account everything: seasonality, COTE, trend, crowd sentiment, GDP, everything. Oh, you just made an edit on the page. There you go. No worries. But seasonality is helpful, and if you really like to look at seasonality, well, then you can go to where is that at? It's going to be under technicals. It should be seasonality scanners, annual seasonality, and you can look at your asset classes and see that. Boom, right there. USD-CHF seasonality, I like. That's the one I've looked at the most recent, and it's supposed to be somewhat bearish here, and it started to pick up there. I can see that Nick is doing some work on, I see this tab, market spreads. You have credit spreads and Bitcoin to gold ratio. Look at that, man. You guys always working on it. I would say, like, genuinely, this is going to be a pitch, but this is going to be a pitch coming from like the heart and from real experience. The edge finder is very, very helpful, right? So I know we just made this whole joke about false data, rigged data, all that good stuff, but this is really, really helpful. Like, if you don't want to manually find retail sales, consumer confidence, CPI, PPI, PCE, interest rates, NFP, unemployment rate, all of the above, right? All of the things that influence an asset's bias, bullish or bearish, then just get the tool, man. It does it for you. Do you guys teach how to read the edge finder? The best way, I would say, to learn how to use the edge finder would probably just be to watch our individual segments. So you have James coming on, you have Tiger, you have myself, you have Marco, you have Nick. You have a lot of people here that use the edge finder in their own unique way, right? Some of us are like, they put a lot of emphasis on technicals, a lot of them not so much. Like, there's different ways how we use the edge finder. So I would just say watch the live stream. Honestly, it's a free way to do it too. We're on for the majority of the morning going into the afternoon, depending on where you're at. So just watch the live stream, man, and just ask us questions about it. Individual segments. What I mean by that is, if you go to A1 Trading / live stream schedule. Oops, didn't mean to do that. A1trading.com/stream should be, did I mistype something? Yeah, a1trading.com/live stream schedule. You can see who's on at what time. So you have Marco that starts us off, and then you have James, and then you have myself, then you have Nick, then you have Marco and I coming in soon, then you have Tiger, and we all use the Edge Finder, and we all use it in our own way. So you can just go to this right here. It's on your current time zone too, so that you don't have to guess, right? And you can just watch us individually or all at once, right? If you want to just watch the whole show top down, you can, and you can just ask the questions on how we uniquely use the Edge Finder. And like Cheryl said, sometimes they have trials that you can sign up. In fact, you can always get a trial, Cheryl's. You just go to A1. I think you just go to trials on the A1 Trading website. You can do that and try it out for yourself. But Marco, hey man, how are you? Sorry about that.
Hello. I'm pretty good. What about you?
Pretty good, man. Sorry about earlier.
Yeah, it's fine. It's fine. It happens. But what are you watching for today? So last week was supposed to be quiet. Ended up being not so quiet on Wednesday when we got the news about bonds. This week, last week of September, last week of August, before Labor Day, we have Jackson Hole on Friday, which people are expecting is going to be possibly a turning point for the Fed. Possibly you get some forward guidance. What do you think?
Yeah, I think it's been historically a good pivot point. I don't know if he's going to really release a lot of information though, given kind of like the changes of lack of forward guidance and that. But we'll see, Marco. As far as what I'm watching, really just the same thing, right? So Euro US dollar to the buy side, I took last week. I took profit on it. It's still getting a very bullish reading, so I'm looking to re-enter on pullback opportunities. Dollar Swiss, similar situation. I'm looking to short that on any pullback opportunities. And gold, of course, is one that I'm definitely watching. That I think a lot of us are just waiting for pullback opportunities. There's really nothing else that I'm looking to participate in. The other thing would be dollar yen to the upside as a DCA approach. So just looking to build a nice position here as I get some discounts if I do get them. But other than that, Marco, really nothing has changed. I'm really looking to just continue the dollar bear story, which makes a lot of sense. You have the economic data pointing to the downside in dollar. You're also having some sentiment things that are pointing to the downside to dollar, especially when you bring up the bond story as well. So that's pretty much what I'm looking at, man. Nothing really has changed. But how about you? How's your weekend? And are you looking at anything new, or what's kind of on your mind there when it comes to markets?
Yeah, so since you have the dollar open, I think we get some month-end dollar buying, which is usually the flow that happens. Now, it's not really tradable on its own. The edge is pretty small in that, but you can definitely use it as a confluence. So essentially, the thinking is a lot of big companies, they do a lot of business in Europe, in Asia, in all over the world, basically in Japan. So they receive euro, pounds, yen, maybe even the Chinese yuan. And what happens then is they need to convert all of the foreign currency into the dollar. They usually do it, I think, last 2 to 3 business days of the month. So I think this week you get like Thursday, Friday, and then you get the 31st of August is Monday next week. So you may get some dollar strength Thursday, Friday, and Monday next week. Could produce a good entry point because personally I'm definitely short on the US dollar and I do want to take advantage of selling the US dollar. I'm already in Aussie dollar longs and I'm looking to possibly scale into even more size. And then I think it's also important to mention Bitcoin. So one interesting thing, Bitcoin, it used to rally a little bit on the news that Saylor bought a big chunk. But last week, the news is actually that Saylor sold Bitcoin, or as MicroStrategy says, they increased their dollar reserves. And how do they increase the dollar reserves? Well, they basically sell Bitcoins to pay off their debt. Essentially, that means this whole move was with Saylor selling, which is pretty good. That's pretty bullish. The problem that I see with the current rally in Bitcoin is we talked about the halving cycle, right? and that October, November is the start of the next bullish period of the halving cycle. Now, it could be the same case as with SpaceX and the first lockup expiration. So if everyone knows that the bullish part of the halving cycle starts in October, and everyone thinks that in October Bitcoin will go up, well, then all of the smart participants will basically position themselves before that event happens. So that's why I think at the moment that event has happened. So essentially, we got kind of the big push. We got the start. We got that bullish move up we were expecting in October, but we got it late August. So yeah, just a second.
So then this would be kind of the situation where if the bullish part started, then you're kind of in the framework of like waiting for a break, retest, and then continuation higher on Bitcoin.
I don't know. It's very overextended at the moment. I'm definitely not looking to buy it here at 80K. I think I'm going to need some sort of a pullback, and I'm definitely not going to chase it. I did talk about like positioning yourself long before October. I think that is now done. So that opportunity is now gone. It is above the 200 SMA, which is a pretty good thing to see. To go long, I think I need to see the price develop a bit more. I do prefer gold, if I'm being honest.
Okay, cool. I think that with Bitcoin, I'm not an expert, but you are in this channel. I think that maybe you have some resistance overhead that could possibly present a pullback into maybe the 200-day, where then at that point it would be a test of, is the 200-day going to act or go from resistance, as we saw here, turn into support? That's kind of how I would see Bitcoin. But I do think that maybe you do have a little bit of a stall out right here, Bitcoin to the downside. And then, right here, either you go below the 200-day or you hold above it. Then at that point, you can probably be more directionally biased. But you mentioned you're looking for gold instead. Me too, man. I'm waiting for it. I'm waiting for now a pullback into the 200-day moving average. So before I was looking at a pullback at 4,200 per se. But now I'm looking for either the 200-day or 4,400 right here is kind of where I would be a buyer of gold.
Yeah. Yep. Or maybe like, so you're thinking of a retest of the 200 SMA or the level that you highlighted there?
Either or. So pull back into the 200-day.
Okay.
Or if we go to 4,400, I think I would be a buyer. Also, too, depending on what's going on, right? If you fall here, but you have oil back at 120 or whatever, then of course that kind of invalidates things. But yeah, generally a pullback into here would be well received for me, and I'll go ahead and start seeing how I can participate to the long side.
Yeah, and did you see the news about Canada that happened over the weekend?
Yeah, so Canada's not happy with the U.S. Tariff stuff.
Yep.
We'll see how that plays out. I think with dollar CAD as well, I think that maybe you have a pullback. Well, I was talking in the stream earlier, but I think a pullback into this 200-day, which we're seeing right now, could be like a test to the downside for bears. Also to anywhere right here, 1.39, 1.395, this general zone. Also to, if you get a pullback into this level, probably continues it lower as well. I do think that just the trend to the dollar right now is just to the downside, right? You had this moment here for DXY where it was just having a great old time, right? You had the perfect storm to the upside, and now you're starting to see the perfect storm, but to the opposite side. And so you just got to keep riding that trend for as long as it gives. So that's kind of what I'm doing.
Yep. We need a new catalyst again. So I was saying the same thing last week, but it's true. And last week we did get the Besant news. Which will it stick? That's the question. I don't think it actually matters much. I've read some scenario analysis. If you list like 3 scenarios, the highest chance right now is for the market to just continue to do its thing and follow the data, which means push yields up. So the long end goes up. The 10-year yield probably breaks the resistance level that is key. And that kind of remains the regime. Now, the question is, does that mean dollar goes up or it means dollar goes down? I would say it actually means dollar down, because the Fed will need to have a repricing. Or like the Fed watch is still pricing in 1 rate hike for 2026. I think that's inaccurate. I think it should be 0 hikes, which should bring the dollar under a bit of pressure, and that's the main thing that I'm positioned for going into, let's say, September.
Yeah, I think that if you have the long end higher, but because it's pricing in risk and the lack of confidence in maybe U.S. debt, then yes, that does poise dollar to go lower, even if you have yields higher. That's definitely a scenario. And I think with gold too, that's one of those things where like it benefits in either way. If you have yields lower, dollar softening, then that's going to benefit gold. But if you have yields higher, but it's higher because the market is pricing in more risk, then that's bullish for gold too. So like it wins in either case. And that's why I think you're starting to see a lot of momentum now pick up in gold, because that's becoming a lot more obvious now, I feel like.
Yeah. Do you think there's a chance we go to all-time highs in 26, 27?
I mean, we've overcame the 200-day moving average. So you're asking by 2027?
Yep. Let's include 27.
Okay. If we're including all of 27, maybe, yeah. Because at that point, you know, at that point you could go from 2.5 rate hikes to neutral to now maybe what are the questions of like rate cuts. And if you go back to asking the question, if you're back in the environment where you're asking how many rate cuts are we getting, then yeah, gold's gonna love that. That's like money printers turning it back on. That was this right here, right? We're going into 2026. Like, how many rate cuts is the market going to get? You know, is it going to be 2? Is it going to be 3? And so that was fueling this. And central banks around the world too were in that asking that same question. So if you're moving up to already 4,700 without that question, imagine when you have that question being asked.
Yeah. And also, let me show you one cool chart. So let's just go to my screen. And let's take a look at gold, monthly, and log. So essentially, this is the log scale, and unfortunately, my chart only goes back to the 70s. Well, only that's a lot, but I wish I had some more data. We had 2 examples where gold had a massive rally to the upside, and then it took 2 decades for new highs. First one was 80s to 2000s. Second one was 2011 to, let's say, 18, 19, when it started to go up. We have one scenario where gold pulled back, and it took like 2 years for all-time highs. So pretty quick rebound there. That was from 74 to 70, let's say 76, 77. So it's 2 for 1 now, according to my data. It's 2 for 1, meaning usually you get like a period of a decade or more where you just go flat or down. I wish I had more data. I think this last one was just a couple of prints in the 60s. Right there, we can zoom into it. If it's accurate, looks like there was a big push up and then a big drop from like the peak in 69 to, well, it was pretty fast where we reclaimed the highs. So yeah, I don't know exactly what to make of it. I'm just thinking this is a rally that doesn't really bring us to the highs. That's how I see the situation.
Yeah, those line up pretty well with like if you zoom out gold, go to like the 12-month chart, the 80s and 2011. Those are like those charts right here that we've seen before, right here. So this one looked, I mean, in relative terms to what we're seeing now, this looks very, very tiny. And then 2011 right here. And you're right, like the forward-looking returns after you finish off the top is very lackluster. It takes a long time to go ahead and recoup. So I guess maybe and I've said this with silver too. Like I've definitely criticized silver in this respect because same thing happened with silver. Is like I'm not a buyer of silver just because I know the forward-looking returns after these crazy blow-off tops are bad. And so maybe with gold too, maybe I should like reframe myself.
You should do the Oanda chart for silver. Because
I'm on the wrong one. Yeah.
That one will have the massive rally in the 80s that happened on silver.
There you go. Perfect. Right. So massive rally in the 80s in 2011, blow
Yep.
off top, lose some steam, and then you're just kind of flat there. Lose some steam, you're kind of flat. And you're seeing this here today. So maybe with gold and silver, you probably see maybe not all-time highs, but you see kind of a slow kind of grind like this, where you have this and then you just kind of maybe.
The thing I wanted to play was the rally that already happened. So now it's not a good time to get in. I think buying these highs is the reward to risk is pretty screwed up. You need some sort of a correction, some sort of a pullback. I think Nick is looking for the same thing. So Nick has been stalking gold, but we just never got a pullback. We almost hit 4,300 at one point, but not quite. And that was my zone that I was looking at. So 4,300, and we never, unfortunately, reached it. I'm just glad we're getting some moves. I'm glad we're getting some volatility. One thing that I have read is, so once all of the hedge funds, the hedge fund managers, the bankers, the pension fund managers, they start coming back from vacation, and after Labor Day, I think Labor Day is beginning of September, right?
Yeah, the week of September 5th.
So as they start coming back into the office, they put on the most popular trade ideas, you can say. And now for us is the job to determine what those popular ideas could be that are going to bring the markets from September to, let's say, December. So is that some sort of music in the background?
Yeah, man, my bad. The grass is being cut. So
okay, no worries.
My apologies.
I thought it was something on my end that my phone started ringing or something, but okay.
My apologies, man. And I'll let you finish what you're saying there, and then I'll go ahead and pivot out that way. It's not really interrupting the stream anymore.
Yeah, I can't hear it anymore, so it looks like it's gone. But I thought it was like aliens coming or something. It was a weird sound.
It is, man.
What I wanted to say, basically, we try and find out the main idea to put on from September going into the year's end. My thinking is sell the dollar, maybe buy gold on pullbacks, but the stocks, definitely I see a lot of opportunity in stocks right now. What are yours? Like the main ones that you like right now going into September?
I really like trading the dollar to the downside, maybe until we get back to these pre-war levels. That's kind of what I'm looking at right now. And then really it's just like watching oil. That's going to be a big thing. Like, it's been very quiet, I feel like, in the Middle East and relative to, like, you know, recent times. So like, does this continue to hold lower? And if so, then maybe we can go back into like trading without the Middle East worries in the back of our mind. Two, that's a very volatile subject. It can just spike up and we have no idea. So that's something that I'm watching too. But I think right now it's you have good earnings. I mean, I think right now it's kind of like you're in this transitory period, I would say. So I really can't say much.
Yeah. Maybe what will help is the NFP, CPI, and the Fed. That should bring more clarity.
Pretty much, man. That's what I've been waiting on too, and what I've been watching in recent times. Like, you know, during this whole time here with DXY, right? We were all waiting on what's going on with inflation, what's going on with the labor market, and it confirmed dollar bearishness. So I think it's just a matter of like seeing the data as it comes in and asking, does it continue to confirm that, or is things starting to shift, right? If you're starting to see maybe hotter inflation prints piled in with like strong labor data, then maybe you can start to ask the question like, okay, how does this chart start to flip around? Like, what would cause that?
Yeah. Although I think the Fed is not going to hike. That's
definitely not. I'm in the same boat.
Pretty firm on that. Yeah. I don't know what would need to happen for me to say the Fed is going to hike. Probably 7% inflation this month or next month would probably warrant a hike. Anything else, just I don't think a hike is going to happen.
I think if you see oil pop and it's back in the 100 to 107 area and it stays there, then Fed could make the judgment of an insurance hike. That's kind of a scenario where I think the Fed could hike, and I think it's somewhat realistic because that could always happen. You're right, like that could always be a case. Marco, seems like you have started a trend here in the chat. So
Did I?
yeah, you did. But yeah, that's kind of like one of the scenarios that I would look at for oil, or for a Fed that's willing to give a rate hike. But besides that, I don't see them either, man. I don't see it. I see the 2-year yield making progress. It is up in recent times, but it is making progress. So as long as we continue to see that, and we continue to see our lower inflation prints, our better labor data, or weakening later data in that sense, then you could see the case to be made for they're probably going to just be neutral.
Yep, I think so. And just a side note, so at the seaside this weekend, at the beach, there was this one kid who basically memorized all of the popular sounds from TikTok, like 6-7, all of the other bullshit. And he kept like spamming all the sounds at the beach and annoying everyone. And I was surprised, like the kid knew everything, all of the sounds that were popular at the moment. He knew them, and he like did an excellent execution of the 6-7 and of the other stuff. I can't even remember what it was, but anyway, that was pretty funny.
Marco, are you worried at all by the influence of those platforms like TikTok? Like I actually personally I personally don't have TikTok, and I got rid of it, I think, in 2022 maybe.
Okay. Yep.
Just because I noticed that the algorithm on TikTok is so aggressive. So I personally made the choice to not use it. But man, do my younger siblings and relatives, do they love that? And
yeah.
The amount of, like you mentioned it, the term is called brain rot, right? Like,
yep.
Does that make you concerned at all for just like the level of competency or maturity for like the younger generation at all, or am I just overreacting?
I think it's horrible. I think it's just pure brain rot. I deleted my TikTok, or I didn't delete it, but I deleted it off the phone because I just spent unnecessary time on it. I still have to use Instagram because I post videos on there, but if I didn't have it for business, I would delete it immediately. So YouTube is the only one that has long form, which I actually find value in. And X, I don't know, X is fine if you know how to create the list of like good sources of traders, but it's pretty bad. I don't know how kids are gonna survive, or their brain is gonna survive this. It probably will survive this because we've been to, as like a race, we've been to or through much more awful stuff. But I think it's just hurting kids a lot, and it should be banned.
Yeah,
probably until they're 18 or 20.
Tiger makes a great point. China's algorithm, from what I've heard as well, is completely different. It's all STEM related, and ours is all like you said, nonsense. But yeah, I was just curious on your thoughts on that, man. I personally, I get bad juju from TikTok. I don't use it, but to each their own. But Marco, I'm going to go ahead and pivot out here. I'm going to let you do your thing, and we'll talk tomorrow.
Yep, absolutely. Thank you, Alan. And we will see each other tomorrow.
All right, man. Take it easy.
See you. Goodbye. So let's take a look at stocks. Let's take a look at the open. So I'm in two positions as far as stocks go. I'm in VLO and PSNL. This one was a massive runner last week on Friday. The SPY has opened lower. It's now below the 10 and the 20 EMA, which is a problem because for my stock picking, I need the SPY to be in a clear uptrend above the 50, 20, and the 10 EMA. Right now, that's not happening. So we're below the 10 and the 20, which means I'm going to have to be careful with buying breakouts. I'm holding two positions and I'm trailing the stop loss. The management with this strategy is you buy the breakout, you close 50% after 3 to 5 days if you want, you put the stop loss to break even, and then you wait for the price to close below the 10 EMA. Okay, below the 10 EMA close is your exit point. So let me see some of the stuff I have as a focus. Okay. So a new rule I have implemented is that the relative volume, this gets a bit complicated, but you can use like Google Gemini for an explanation. Basically, relative volume needs to be pretty high on the market open. Like in the first half hour, it needs to be 25% or 30%, which means that the volume on the open is much, much higher than on previous days, which means that institutions are probably buying the breakout, which means that there's a lot higher chance that the breakout is successful. So let me just scroll through the list. Oscar, AMC actually starting to break out here, although it's not really my favorite thing. Frog, AMC, see the relative volume with AMC could be nice because it's already at 8% and we're just 10 minutes into or after the open. But with Bro has also had a breakout, which is brown and brown, also had a breakout out of this level of resistance, but the relative volume is 1%. That's nothing. And with these ones, with like VLO and PSNL, the relative volume was massive. I can show you. So if we go to the replay and if we go to the 15-minute and we click 2 times and we go back to the daily, so the relative volume in the first half hour on the open on PSNL last week on Wednesday was 29%. 29% relative volume, which is a good confirmation that the big players, institutions are in. Okay. So yeah, this is just in forward testing, experimenting. So far, it has been going well, but today I probably won't do much as the SPY is not in a good place. The SPY seems to be struggling at the moment. And the Qs, same thing. Qs pretty bad. Qs are now below the 200. Yeah. And they're curving down. For the SPY, they're not yet curving down. Well, the 10 is curving down. And also, let me exit the log scale. Aussie dollar is a position that I have. I have closed 50% this morning. You have gotten notified if you're in the A1 Discord. Essentially, this is the bet on a weaker US dollar. This is a bet on a Fed, the repricing. So closed 50%, put the stop loss to break even. We will see how it develops. I can always add more. I would look to add more size if we do pull back to a better level or to a more cheaper level. I think we do pull back here. I think this has now gotten a bit overextended, so it makes sense. It makes sense to take some size off. The idea is to brainwash them. You guys sound like the 1990s when parents complained on TV. Marco, how's your trading going? Are you making any profits in these tough markets? It's been going pretty well. You can follow my DarwinX if you want, where I'm building a track record. So I'm up 2.53% on the month, up 24.25% on the year. Let me see last week. Can we go to the last week? So it's been going pretty well. I'm pretty happy. Trying to attract capital here. Anyway, if you want to follow me, if you want to follow my track record, it's OHGE is the ticker. You can even invest in the ticker if you want. So I'm running, you can say I'm running a small hedge fund on the platform. That's the main idea behind the platform. I do want to mention, if you guys are looking to get funded, A1 Live, 20% off Ola Prime. So with the code A1 Live, you can get 20% off Ola Prime. Do take a look at their Trustpilot. Prime Trustpilot. Do read through the reviews. 4.5 out of 5 in this niche. That's pretty good, I would say. Join the A1 Trading Discord. Talk to the traders in the Discord. We have some traders who got steady payouts from Ola Prime, and they're pretty happy with their experience. One thing that I like is that there's no consistency rule. If you're a swing trader, you probably know about this rule, and it's a pain in the ass. It's super tough to get a payout with a prop firm that has a consistency rule. So Ola Prime doesn't have it on some account types, which means it's great for swing traders. So that's about it. That's about it for my segment. If you guys want to watch my segment again, you can catch me tomorrow. I'll be streaming this week or every day this week, 2 segments per day. I wish you good luck. The best theme to focus on at the moment is probably selling the US dollar, buying stocks, and buying gold on pullbacks. I think crypto is not going to go up a lot more. I think the move in crypto is done. So now it's probably going to be a pause or a bit of a downside. And yeah, that's about it. Thank you. Don't go anywhere because Tiger is coming on in 30 seconds. See you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Can I get a mic check? I got some new equipment. So can you guys just tap in the chat if you can hear me, if you can see me, all the tings. Let me know. Let me know. I think I do hear myself. All I got to do is turn up my other monitor. Well, hello. Welcome to Monday, everybody. Finally got me a new 4K webcam. So hopefully this looks better. I have discovered that when I have it on, I don't even need any of my lights because the natural light shows up a lot better. So I turned off my Ring camera light in front. So it's all good. Okay, good. Does this sound better? Might start doing some musical recordings like I used to now that I got this. But anyway, guys, welcome to Monday. As always, let me know what tickers you're keeping an eye on. Anything you'd like to get zoned out or mapped out, I'd be happy to do that for you. Just thought we would start with a little story. So first, we got a new kitten over the weekend for our other cat, or Ronagato. That's the name of our older cat. We had a cat about like this one here a few years ago. He decided to plummet off of our 3rd-story balcony into the bushes, and we never saw him again. So fast forward a couple years later, decided to get another one, and we're still trying to figure out a name for it. So it's a little girl cat. You guys are going to have to help me on the chat. The first cat we had, we asked for a girl. It turned out it was a boy, and then it turned out it was a girl again. So we still hadn't named it yet. So I just decided to name it Dr. Frankfurter. Does that make sense? Right? Dr. Frankfurter? Because we could not figure out if it was a boy or a girl. So anyway, yeah. RIP to that one. Got a new one. I need you guys to help me with a name. So I'll be looking at the comments. Guys, where are we at? Well, today, not a whole lot going on. I am on the correct date, right? Yeah, take a look at the calendar over here. We got Scott Bessent going to speak later on this afternoon here in the States. Got some Aussie inflation numbers coming out tomorrow. Wednesday, we get our PCE, guys. So that's going to be inflation reading number 3 on the month. We always get our CPI, PPI a little earlier in the month, usually towards that first week and a half. And then of course the PCE here towards the end of the month. So just keep in mind when we get that on Wednesday, that's so far we're sitting at five cooler inflation reports in a row, right? So yeah, things have been looking pretty good over there. It's not always 100% that the PCE is going to follow the CPI and the PPI, but it's close enough to where you can almost trend it like a chart, right? So anyway, we'll get that on Wednesday to see if we continue that those cooler readings or not. Jackson Hole on Thursday. What? They didn't put my birthday on the calendar for Thursday. What the hell? Yeah, my birthday is on Thursday, guys. So I will be yet another year older, and I guess another year wiser is what they say. So but then Friday we do get well, actually starting on Thursday we get the Jackson Hole Symposium. So you get all the aristocrats and all the rich guys and the central bankers, prominent people meeting up, kind of like Bohemian Grove, if anybody's ever heard of that. That's kind of what I liken it to, one of those secret societies. So they'll go and cuss and discuss, tell us what they're going to do to our world over the next coming period of time. That starts on Thursday, and then that also continues into Friday and Saturday. So it's always interesting to see what they're going to talk about up there in Wyoming here in the States. And we'll get some details if we hear anything relevant out of that, get it to you from that 3-day symposium. So, and I think they also call that the Kansas City Symposium, if I'm not mistaken, Kansas City Fed Economic Symposium. So there you go. Did that originate right here in my backyard and I didn't even know it? That's your Jackson Hole. What, Kansas City wasn't enough? They're going to go to Wyoming? I can't really blame them because it's pretty up there. But yeah, that's going to be kind of a look at the items for the week. GDP numbers for Canada on Friday. Fed Chair Warsh to speak, flap his lips, cuss and discuss, and we'll go from there. University of Michigan sentiment, I think, is the last item I see. So anyway, guys, let me know. OG, that's right, OG. Let me know what tickers you guys are looking at, Dr. Frankfurter. Yeah, give up companies. Yeah, we didn't know what we had because it got sick, and then that's when the vet said it was a different sex the first time, and then we thought it was a boy, so we took it in to get fixed, and a different vet said, "This ain't a boy. There's nothing to cut." So it was a girl again. So yeah, it's a very funny story, but anyway, we got a new one to replace him. So anyway, top setups, guys. Gold, silver still up there. Euro, dollar is king dingaling at the moment. You got some pound dollar, pound yen, euro for the euro FX futures traders. Okay, the euro is looking pretty good for you if you're just looking at the fundamentals and sentiments. Dollar CAD, dollar Swiss bringing up the rear on the bearish side. So they're still down there in the basement, happily, just throwing a good old fashioned party. Aussie CAD as well. So we'll take a look at some of these items, guys. Before I do, the one thing I wanted to look at real quick was the COT report. A little bit of mixed data on the indexes. Okay, the Nasdaq was the big winner, but the S&P was the big loser. So that's about as mixed gets. If Nick happens to make a video about that, you guys already know what he's going to title it. It's either they bought, they sold, or mixed, right? So to me, this looks a little bit on the mixed side. So S&P at the bottom. Bitcoin, with all its fun it had last week, had a decline. But remember, this report is accurate as of Tuesday, right? This report, when we get it on Fridays after the bell, is always accurate as of, I do believe, the end of the trading day Tuesday. Well, when did we get our bond buyback statement or headline? That was Wednesday morning, right? So we still don't really see what the smart money did from the bond buyback, but we'll know on Friday, and it'll be accurate as of tomorrow. So always keep that in mind. The COT report, the commitment to traders report, it's always 3 days late when we get it. It's always 3 days delayed, right? So not ideal. We would like to have data updated ASAP and given to us. I don't know why they do it that way, why they always wait 3 days. I don't know. Does the SEC or the FTC have to verify things 2, 3, 14 times? I don't know. It would be nice to get that ASAP, but it's always 3 days delayed. So these numbers are as of the day before the bond statement. So keep that in mind, guys. Okay. And as far as currencies go on the top side here, Swissy was the #1 bought up currency according to the COT report. Taking a look over here at the, let's go over here to the surprise index. Canada is our new #1. They are exceeding on 85% of its high impact economic calendar events. The dollar and the pound are out of the gutter. Dollar did get that higher, the better than expected unemployment claims number last week to bump us from 17 to 27%. Our new futility king is the Aussie dollar as far as the major currencies, the 8 majors. So Aussie and pound hanging out in the basement. South Africa's down there at the same time. So that's a look at your strong versus weak currencies from a fundamental perspective. And if we go on over here to the charts, check out a few things over here. #1, go to the majors. We'll just go through the majors for you guys real quick. Again, throw out any tickers you guys want me to check out. I'll be on here to close out the show for the next 15 minutes, 20 minutes or so. So Aussie dollar did finally break through this supply that I was telling you guys about last week. Broke and closed, kind of gave us a new impulse move. Impulse moves break structures, break swing highs, lows, break supply demand zones, break support resistance, however you want to refer to it, it broke it. So takes a lot of money to do so. Typically means there's some underlying strength somewhere in that move. So if we go all the way to the beginning of that move, we do have a 4-hour, was that a 4-hour? Yeah, 4-hour demand over here. This is showing where the gap is, right? The gap showing demand heavily exceeded supply. The only thing I dislike about this zone is the volume. Did effort match result? Did we have a VSA candle that was yellow or red down here? No, we didn't. So while structurally it looks great, I don't know how true the move is, right? I just don't know. That's obviously, that was the day after the bond release. The bond release down here, the bond headline, rather, the double in the buybacks. And again, Scott Bassett said they do reserve the right to add to that if need be. And then he said he wasn't going to do it. And then we got another headline saying that they were going to likely pull the money from the Treasury's $1 trillion general fund. How's that for a general fund? That's just money laying around in their sock drawer. So that's likely where they're going to pull that $4 billion, I think it was, or close to $4 billion from to fund that. So I don't know. I still like the retracements to all of Wednesday's moves that we had on basically all these assets. I got to be honest with you, because I think that the banks, if somehow price retraces back to those zones, whether it's demand or supply, depending on which currencies we're looking at, I think they're going to be defending the hell out of those areas. Because if they start going below these areas, well, now they're all in the red unless they took their profits up here. So it's only been, this is now business day number 3 since. So I don't know. I'm going to be interested in the retracements back to those demand zones. But again, right, that was my favorite when price was in this general area. Well, now we've kind of rebased. This is a 4-hour chart here on the left. So we've rebased, and now we've pushed up to make a new consolidation. So I can't just outright ignore this demand. Again, I like everything about it except for the volume. That's it. If we would have had a better picture on the volume, I'd be 100% all in on this. So I say all that to say I would likely be interested in a, little cheaper of a position here, maybe a partial position. And worst case scenario, it saws right through it. Well, we got a better one at the bottom, because I don't think the smart money are going to let price slide any further down. If they do, there's another demand over here. So I'm kind of looking at this as a zone on top of a zone, guys, for Aussie dollar, and really for all these major pairs you'll see here in a second. I would look to take my first buy on that zone there, but you see where I've put my projected stop loss. It's going to be below this zone too. Zone on top of a zone. It's almost too far away. It's almost too much clearance, but it's just close enough to where I would just put the whole thing in. we have a new swing high. So that's the one good thing about this impulse move, is it gave us a new swing high target to reach for. So this would likely be about a 2-to-1, right? If this is 1 unit of risk from the proximal line of this pre-bond buyback headline demand zone, and we measure to the stop loss, and then we take that times 2, that's going to roughly be about the top of here. So that would be about a 2-to-1. Okay. 2-to-1s, I'm fine with that. Remember, that's the one big change I personally have made, going from 3-to-1 minimum to 2-to-1. Because there's no doubt, there's no denying that there's a lot of money started entering the market on a lot of these assets at that particular time. So that's going to be my favorite look. Aussie dollar and euro dollar. If we move on over here, it's on our bullish list as well. Euro dollar is the one at the top. Aussie dollar was a +4. So that's the one that's just barely tall enough to ride the roller coaster. But euro dollar is clearly very bullish. Pound dollar as well. So I'm really liking the structure on those as far as the scoring goes. But let's go see what the structure tells us. So moving averages are pointed up. We're looking good here on the daily. Flip on over here to 4-hour. And we pretty much created a flip zone, guys. So we had an old daily supply over here. If we go briefly to the daily, see, we had a base, we had a big drop, we had a big gap, expanded range candle. While it was not yellow, it was still a much larger green candle than the previous candles. So I'm not trying to short from here. I'm just trying to utilize this as saying, hey, that was a strong zone at one point, and we chewed through it. Really nice chew through on Wednesday. So same thing. Where's the origin of that move? Well, it's going to be right here on Wednesday. All right? Wednesday preceding that bond buyback headline. So I'm looking for that particular zone right there, 116.08. Is the proximal line, 116 the zone, the 116 psychological level. So that is going to be another play. Now I'm gonna because I didn't really get any liquidity like swing lows over here, it's gonna have to do it. So if we start coming into this area, guys, I need to see a structure broken. Let's break a structure, then we can look for the buy. Okay. Break this here structure. This right here gives us our new impulse move because it broke a structure. And then let's just get a retracement to a newly created demand zone from this newly created impulse leg. That's going to be my play for euro dollar. It's got to prove itself. Even though I love the volume, even though I love the red candles, the red VSA candles, I'm picky. I just want to see it break a structure. Just give me one broken structure. That's 50% of my question answered, which is it going to turn around from here? Is it going to bounce? Is that demand zone going to give us a boost to the upside? And that's just kind of my way of doing it, guys. Always look for me, I always look for the impulse move, and I always look for the discount into demand. Okay. So that's going to be my favorite play for the week if we happen to get any type of decline down to it. And as always, when I map these out, guys, it never looks 100% like that. That's just the general idea of what I'm looking for. Okay. Fair enough on that. So that's euro dollar, pound dollar, very same thing, very similar structure. The thing I like about pound dollar a little more is we broke that overhead supply dating back to this period over here. Swing high, double top, triple top, you can call it what you want, but we also have a 4-hour supply formed in here. Now, I would honestly, if I were to, well, let's go back over here. Okay, yeah. So we did break through it. Okay. In general, it's not my favorite thing to do. If I zoom out to swing low, swing high, it's not my favorite thing to do to buy up here in the top part of the curve. Right? You see my curve analysis. Well, actually, I need to redo it. The point is we're pretty high up. And we did poke through the structures over here, so that's a good thing. So yeah, I'm going to stick with it. Again, we had a lot of volume that took place Wednesday after that headline. So there's your pound dollar red bars right there as well. So just like I showed on euro dollar, got to see something similar over here on pound dollar for me to get excited about it, right? So that's going to be the play. Again, broken structure. I know I didn't draw that very pretty, but broken structure, impulse move. swing low, swing high, underlying strength in an impulse move because it broke a structure, because it takes a lot of money to break a structure, and then find a new demand from the impulse move. Roughly right there. Or you can use a 50% fib or a 61.8 fib. I wouldn't go anything higher, lower than that personally, but that would be roughly about the 61.8 of this particular move right here, right? Boom. So it's a little lower, but yeah, give or take. And that's going to be the play that I'm looking at for pound dollar. So pound dollar, euro dollar, very, very same structure. Not surprising. Let's see what you guys got over here. Dollar CAD, says Jeremy. What's your thoughts on Bitcoin's rally? I need to see a weekly structural break for me to be confident that we're actually turning around to the upside. That's my honest answer. If we go to Bitcoin, I'll just show you that real quick. Yeah, everything looks peachy on a 1 hour. Everything looks peachy on a 4 hour. Everything looks peachy on a daily. But what happens if you go to a weekly? Come on. So on a weekly time frame, we had a change of character, right? We broke this structure back on the week of February the 2nd. So basically the war week, or no, that was the month before. Never mind. Scratch that. So that would have been preceding the war, I should say. This all took place before the war started. But that's where we started to having that big, ugly decline from since October, wasn't it? Yeah, October of 2025. We broke structure to the downside. We now have a high point. We have a lower high. We have a lower high. We still have not broken that structure to the upside on this weekly chart, have we? You got a low point. You got a lower low here. You have a lower low here, even lower than this. But remember, this is where we started bouncing into the monthly demand. Monthly demand, weekly demand, daily demand, right? We still have this daily a little deeper. Pull that forward now. A little deeper. That's at the bottom of the monthly. So that's your confluence on the demand side. On the supply side. So if I'm going to get excited about buying Bitcoin, which, by the way, did I lose you? God dang. So, sorry, guys. 1 second. Is my setup working? Can you guys see me? What is going on here? Can you guys see me? Oh, okay. Sorry, guys. I think I lost you for a second or something. Okay. So anyway, just to finish up on Bitcoin, guys, I'm not interested until we break that structure. Again, top setups isn't giving us anything. It's still pretty well neutral between that -4 to +4 range. So that's my thoughts. Just when in doubt, zoom out and, just observe the structures. It's all about the structures. I love supply and demand zones, but when I'm looking at it from a top-down view, it's all about the structures. And until we break that, got no interest. Because to me, this is our impulse leg, so that means we're still within that range. We have to break that range, whether on the top side where I drew that white line or the bottom side where I drew that new white line there. Let's get rid of that white line so I don't confuse everybody. So until we get out of that range of those white lines, I'm not 100% convinced either way. Okay, so that's Bitcoin. We saw dollar CAD. Somebody posted that. Let me go over there. $2 CAD real quick. Obviously, it's right there with dollar Swiss in the basement of futility. So bearish dollar, pro Swiss, pro CAD on both of these pairs. Trend is looking great. Downtrend. My moving averages are in sync. And we're good to look. And before I even get to the 4 hour, just want to look at dollar Swiss. Dollar Swiss is the same, but we did bounce into daily demand. So that's something to keep an eye on when we look at dollar Swiss in a second. But nevertheless, they're both pointing down. So I need to go back over here to my 4 hour chart, and you guys can see what I have drawn up here. Got a daily supply, got a 4 hour confluence right in this area. And to be honest, the bulk of the volume, our yellow candle, Didn't even start until this candle here, which is basically where the proximal line of the supply zone starts, right? So while I put my alert up here, I think I'm going to move it to the daily instead of the 4-hour. Why am I doing that? Well, because sometimes the daily takes price before it even has a chance to get to my 4-hour based off of volume. And you guys see where that candle starts right here, right? And where the volume really picks up. That's right there. So if I wait for the 4-hour, I may not get a fill. It may just trickle in just to the proximal line of the daily and just fall from there. So I'm actually, now that I see this a little deeper, going to move my alert to the daily itself. Okay. So there we go. That's what I'm interested in. As always, guys, not financial advice. These are just the areas I'm personally looking at. This is new too, because what we had back here was a little bit of sideways equilibrium for a while. And what I was looking for was a liquidity sweep down, liquidity sweep up to this supply. So we can play that manipulation game, the contraction, expansion, trend phase of master pattern. Again, that's a actionable way of looking at Wyckoff trading methods. Effort result, liquidity sweeps, structural breaks, yada, yada, right? But when we did get our breakdown, which was half of what I wanted to see, it rebased and dropped further, aided by the bonds, the bond movements. You also had some FOMC minutes data sprinkled through there as well, but I think it was all about the bond doubling up of the bond buybacks. That's why we saw dollar continue to plummet, guys. Bitcoin jumped up, gold did all right, dollar just did terrible. Okay, so I'm going to look for a retracement to this supply confluence right here for dollar CAD. 138.61 is the area I'm looking at. Again, guys, don't look at this as a signal service for me. Do your own due diligence when you're looking at this stuff. But that just so happens to be what I'm looking at. Now, the other thing I like about dollar CAD is the fact that our 200 EMA, which by the way, our 50 is below our 200 over here. So that's good. 200 is just below the zone. So I would want to see a pierce of the 200. I like to do this on the 1 hour, which is my refined time frame, right? Higher time frame daily for trend. 4-hour time frame, which is my intermediate for supply and demand zones. And then 4 divided by 4, the rule of 4 says go to 1 hour to refine the entries. On the refinement, that's where I want to look for my 200 EMA to get pierced just before bouncing into my zone. So pierce the 200, go into my zone, right? Give me a smaller time frame. Even from that, I'll go down to the 15 and look for a confirmation entry to go short. Okay. So that's what I'm looking at. Do have 4 minutes left. Let's see what else y'all got. Yeah, Dixie is Dixie rising. Let's go to the Dixie real quick. Go on over here. Yeah. Rate release. Okay. This was July 29th. This is Kevin Warsh's presser. We saw that big ugly drop. We bounced into demand, which also doubled as a resistance turn to support. We had trouble with that for a couple of weeks. The bond announcement, the bond headline on Wednesday, pushed us down to a new level. This happens all the time, guys. This is the ebbs and the flows of the market. For every uptrend, you have a basing. You have a little bit of a retracement. For a downtrend, you have a basing or a slight retracement. So that just so happened to be the catalyst to push us down to the next level of price action. So you say it's up, but if I look at it on a daily, I don't know about that, right? Let's see where the daily candle ends up. Yeah, it looks up when you look at a 15-minute chart, when you look at a 5-minute chart. But remember, this is what the banks are looking at. The banks are looking at this picture right here, right? Just keep that in mind. They're keeping an eye on the fact that ever since the rate statement, that's where the dollar finally declined. And I thought it was overdue at that point because the data was terrible, right? July was not a good month for dollar data. August hasn't been great either, right? We're at a 27% beat rate. I think we're at about 30% when we ended the month of July. So we're relatively about the same spot. But yeah, the dollar's, to me, looking overall pretty weak. Pretty weak. And yeah, I guess that's about all I can say about that. Retest 99.50. Yeah. Yeah, we're close to it, ain't we? Pretty close to it. Also close to an equilibrium point. Well, What's your thoughts on the dollar with war continuing, including Canadian tariffs? Taiga. Well, it's just kind of in a pickle right now. It's terrible data. We go back over here to the economic calendar, or I should say the heat map for the US dollar. Come on, if I can get over there. Heat map, US economy. Beat rate's terrible. Remember, we did have a good jobless claims number last week, but that's a week-to-week number. So this number changes a lot. Unemployment rate and the MPMI data is all we've had that's good. That's it. Everything else has been a miss. You got a couple inflation neutral readings of late. But other than that, the data is terrible. The data would suggest drops on the dollar. But then again, you've got the geopolitical situation over in the Middle East. Sounds to me like they're trying to go from kinetic attacks to more economic attacks, economic sanctions between Treasury Secretary Scott Bessent, President Trump as well. And they basically, President Trump called it economic D-Day. Okay, this is what he referred to the sanctions package last week. So I don't know. I got to be honest with you. I'm not quite certain how that would work on the economic front. If they're not shooting bombs at the moment, of course, there's still the uncertainty that it could happen. We don't know yet. President Trump, he's got a short trigger finger, or an itchy trigger finger. So who the hell knows? I'm not quite certain. I got to be honest. And this would be a good question for Nick. And it's something I'm actually going to study after I hang up with you guys here in a second, is how would the economic sanctions affect the dollar? That's a good question, right? That's a very good question. So I'll be transparent with you guys. I don't know. I'll have to go and research it myself. But at the end of the day, we can see in front of us that the data is not looking so good. But we do have PCE on Wednesday, which could give us, if we get a hotter PCE number, then that would obviously give us a little bit of a boost. Anything bearish, it's going to stay right where it's at. And then I thought I saw NFP. Do we not have NFP on Friday? I didn't see it over here, did I? Oh, preliminary benchmark payrolls. Okay. Yeah, I've got a couple calendars. I saw non-farm payroll on another one, but I think that said preliminary as well. So, okay. All right, guys. Well, look, that's the end of the show for the day. Hope I sound better. Hope I look better. You know, what's funny is I don't even have to turn on my lights up here. I usually have a ring light and all that. I'm not using any of my lights. So hopefully I don't look too pasty white. I promise I've been in the swimming pool for the last month. I've got a tan going on, even if the camera doesn't do me justice. So ladies and gentlemen, take care. Have a wonderful Monday, and show up tomorrow and we'll run it back. Take care.